Good evening, friends. Welcome to the next virtual coaching classes session organized by Board of Studies ICAI. Today's session, we are going to talk about the topics on accounts and records under GST law, payment of taxes under GST law. So this paper, we are going to have a couple of discussions from the earlier session. Earlier session, we have stopped our discussion at e-way bill. We have understood the basics of e-way bill, who has to prepare e-way bill, what are the circumstances we need to prepare a e-way bill. So today's session, we will also have our discussion extended with a couple of important aspects in line with e-way bill. Then we will start with this topic called accounts and records under GST law. I would draw your attention to this YouTube videos, which many of the students have posted your queries in relation to this particular sessions are not available. So I would like to say that ICAI is working on that particular thing. All the sessions which are recorded and which are made available to earlier, they shall be restored back. So probably in a week's time, you can see all those videos brought back to life. Meanwhile, I would request any one of you to confirm you're able to hear me. You're also able to see my presentation, and also my video is available. If you can confirm me on the question window, it would be great for me to go ahead with the discussion now. And as I said, what we will do, Anjali says, good evening. Yes, Anjali, good evening. Today, we will have our discussion on e-way bill provisions. Like, if at all, if the e-way bill is not there, what will be the proper officer under GST law will verify when there is a consignment where the goods are being carried? What documents are expected under GST law? Whether the verification, this interception of a vehicle, stopping of a vehicle, verification of the documents, can it be done on a check post to check post, or will it be done at one point in place in entire state? So those provisions we will understand in relation to e-way bill. From there, we will move on to understand the accounts and records under GST law. Next is your payment of taxes, where we have this electronic credit ledger, electronic cash ledger, electronic liability ledger. We'll have some time to understand these ledgers, how the accounting entries do happen, like our books of accounts on the GST portal, how these ledgers are updated. We will have one by one discussion on these three aspects. Very, very hardcore important topic is interest on delayed payment of tax, section 50. I would say majority of you who are listening to me in the process of your articleship days, Raman has confirmed, yes, thanks for confirming, Raman. Most of you, when you're doing your articleship, you would have come across a scenario where the assessee has not paid the tax, or there was a delay, or there was a short payment of tax. In the process of delayed filing of returns or short payment of tax, the principal would have asked you to compute the interest. Now we need to understand what does the law say with regards to payment of interest. There are a couple of apprehensions. When you pay the tax amount through electronic credit ledger, interest should not be paid. When you pay the tax amount through electronic cash ledger, interest should be paid. All those basic aspects will have an in-detail analysis in this payment of taxes chapter. And the next set of principle is order of utilization of input tax credit. Majority people who are listening to me, who are having experience and exposure with reference to filing of GST returns, this ambit called set of adjustment of my output tax with my input tax. This is one area where majority of you would have practical difficulty in terms of handling this utilization. So should I adjust IGST or CGST? Should I adjust SGST or IGST? If at all we are in a union territory, can I offset this UTGST with my CGST? Now there are a couple of permutations and combinations where my GST portal do permit me to file. Friends, 99%, 99.99%, most of the SSC blindly go with the figures which are auto-populated on my GST common portal. They say, sir, I get a validation error when I click a button called offset liability. This does not permit me. So we will understand that entire concept of this utilization of input tax credit. Then finally, we will understand the payment process for a TDS and TCS. The mechanism of filing of returns, we will discuss in detail at a later point in time. In today's discussion, today's chapter, we will understand what is a concept of TDS, what is a concept of TCS. Who has to comply with this concept of TDS and who has to comply with this concept called TCS? What is the mechanism to make the payment? How do the payment happens? How the seller is affected with this particular provision? All these aspects, we'll have a detailed understanding under this TDS and TCS. So this is my overall coverage for today's session. And examination, expect one compulsory question for a weightage of 6 marks from either of these two chapters. My examination, there are questions which are asked from this topic called computation of interest on delayed payment of tax, utilization, TDS, TCS provisions. Now, these are 3 areas where there is a possibility to test me a problem from examination point of view. Theory, now this accounts and records, there are a couple of theoretical questions. I would say more like a case study. As I take you through my presentation, I'll make you understand what does the law expects. We will have a clarity on those aspects. So friends, let us start with our discussion for today. First aspect, documents and devices to be carried. Now, this particular rule under GST law, it says, when there is a consignment, when there is a transportation, now delivery of goods, how can it happen? When you visualize the practical business world, there is a business unit. The customer can walk into the business unit, purchase the goods and take it back. The seller can hire a transport vehicle, put the goods into a transport vehicle and ask the transporter to give a delivery. Now, when we talk about goods, barring the exempted list, what we have discussed in the last session. And by the way, this presentation is hosted on ICAI website. I would recommend all of you download and put it for your reference when you're reading through or when you're listening to this video. It will be helpful. Now, with respect to this movement of goods, the transportation, the conveyance, the vehicle, whenever there is a vehicle used for the purpose of transportation of these goods, the law expects that the goods, the transport conveyance should have a invoice, tax invoice, should have a bill of supply or a delivery challan. Now, let us understand this particular expectation clearly from the law point of view. Now, they say an invoice. So, when can I issue a tax invoice? When there is a supply of taxable goods. Okay. So, when can I issue a bill of supply? When there is a supply of goods by a composition person, or when there is a registered person who is supplying exempted goods. I repeat, a bill of supply will be issued by a registered person. A registered person who is registered under Section 10 for composition. Second, a registered person who is making a supply of exempted goods. So, I repeat, when there is a supply of taxable goods, my tax invoice comes into picture. Supply of exempted goods, bill of supply comes into picture. A delivery challan or a delivery challan. When does my delivery challan come into picture? Movement of goods not on account of supply. So, where is the movement of goods not on account of supply? Job work. Meant for exhibition, trade exhibition. Meant for your warranty replacement. So, there are various reasons where I don't use a tax invoice. I don't use a bill of supply. Rather, I use something called delivery challan. So, please keep in mind, whenever there is a consignment, whenever there is a transportation of goods, the person in charge, who the person in charge. The law says this person, the person in charge. Sir, who is the person in charge? In relation to transportation, this goods, transport goods, the driver is the person called person in charge. Whenever there is a interception, whenever there is a stoppage of a vehicle, the lawmaker or the officer appointed by the lawmaker, I call as a proper officer. The proper officer at the checkpost or somewhere, he can stop that vehicle. That's called interception. Why? He wanted to verify certain aspects. There is an expectation that a vehicle should carry. So first element is either of these three, either of these three. A tax invoice, a bill of supply, or a delivery challan. Either of these three documents, and they say, apart from these three, there is a connotation called and. A copy of e-way bill in physical or e-way bill in electronic form. So they are expecting a copy of e-way bill. Please bear in mind, there could be a possibility of movement of goods where there is no e-way bill required. So why no e-way bill required? Value of the goods less than 50,000, or the movement of goods is cost for personal usage. I'll give you an example. Sir, I went to a Honda showroom. I have purchased a two-wheeler called Honda. This bike is having a value of 80,000. Now, when I'm taking the vehicle out of the showroom, none of the GST officer can stop me and say, where is the e-way bill for this? Reason, if you look into our previous session, there is a list of entries where e-way bill is not compulsory. So please bear in mind, only when there is a e-way bill provisions applicable, along with these three documents, e-way bill is something which is required. Now, this is when the movement of goods is happening in relation to supply or in relation to bill of supply or a delivery challan, right? Now, three documents. Whenever there is a transportation of goods, the transporter should ensure that along with either of these three documents, e-way bill, wherever my rule 138 is applicable. Please make a note in your working note. I wouldn't say you have to by heart this. I would say, please remember these provisions wherever possible with the GST discussions we have. Rule 138, which talks about e-way bill. So the law says, along with these three documents, you have a e-way bill, physical or electronic. So if I have an e-way bill number, officer can check in his device. He can just type the e-way bill number, check whether it has got all the details. Now, in relation to imports, when the metal is coming from a foreign nation to my factory, from the customs port, when I get that material in relation to imports, what the law maker says, please have a bill of entry. Because it is an import, you can have your bill of entry. Those bill of entry should be updated in my e-way bill. So e-way bill, people who have less exposure to GST or law, less exposure in terms of your articleship, don't worry. If you look into my e-way bill, in e-way bill part A, it says inward of goods, outward of goods. Are you buying the goods or are you removing the goods? The moment I say inward, my inward, it says, but purchase from a registered buyer, imports. So I'll select the option called imports. So in my e-way bill, part A, inward, I will select an option called import. The moment I select import, my bill of entry details are enabled, where I'll enter what is my bill of entry. Again, people who doesn't know BOA, it's a bill of entry. In the customs port, when I get the material cleared, my customs authorities does an assessment of the duty I have to pay, and they issue a document called bill of entry. This bill of entry is a document. Bill of entry is a document which entitles me to claim input tax credit. Section 16, when you have read, you would have studied that this bill of entry is one document relevant for me to take ITC. So they say, please update your bill of entry in your part A of e-way bill. No physical copy of invoice is required if e-invoice is available electronically. Now, this is a fantastic amendment which they brought in, which we have discussed yesterday. Wherever my supplier has generated an e-invoice, that e-invoice need not to be carried physically. The moment I have my e-invoice soft copy, that is good enough. That is good enough for me to carry along with my consignment. So please bear in mind, a person who is carrying the goods, whenever there is an interception, either of these three documents, tax invoice, bill of bill of supply or delivery challan, either of these three documents along with that e-way bill. This is something which is expected. Sir, what if any of these documents are not there? Then it is deemed that you have contravened the provisions of GST law, right? This is an interpretation. There is one question from Deepesh Mishra. Please make a note that this particular recorded videos, these recorded videos are technical, for some technical reason are not available. ICAI has been working on this particular issue. In a week's time, you will get the resolution for these sessions. Don't worry on that. Coming back to our discussion, verification of documents. We have understood that what is required for me to carry. Now let us understand. What details to be verified, or what is the expectation by the officer. This gentleman called proper officer, who has been appointed by the commissioner to intercept any conveyance. Intercept is you stop a vehicle. Why? To verify the e-way bill, either in physical or electronic form, where the movement of goods is intrastate or interstate. So the proper officer, my proper officer is going to verify this particular conveyance along with my e-way bill. Physical verification of conveyance shall be carried out by the proper officer if at all there is a knowledge of tax evasion. Please keep in mind, some of the intelligence team will have that there is a consignment where there is a tax evasion happening. The value of goods is much higher than the invoice which is prepared, or some other material is being loaded. That is a point in time where the proper officer can verify the conveyance to ensure that the goods what you are carrying and the bill are one and the same. Now, inspection and verification of goods. This is one slide. I would recommend most of you to keep in mind, because this is one thing which is going to help you post qualification when you get into advisory, when you get into support service for your client. Rule 138 says that inspection and verification of goods. Whenever my consignment, whenever my vehicle has been stopped by an officer, this particular officer is expected to issue something called summary report. Now, this proper officer has stopped the vehicle. Why? He has a doubt that this consignment is not having either a document called e-way bill, or it doesn't have a document called your tax invoice or bill of supply. Now, wherever the inspection is done by one officer, that officer is expected to issue something called summary report. Now, this summary report will be issued in a form called e-way bill 03, EWB 03. This part A should be updated within a period of 24 hours, and part B should be updated within a period of 3 days from the date of inspection. So why is that so important that this inspection report we have to give importance? Reason, if once the vehicle has been intercepted within a state, if once there is a interception of a vehicle in a state, across the state, again, that vehicle cannot be stopped by an officer. I repeat, once the proper officer stops your vehicle for questioning, for verification, for examining, the same vehicle cannot be again stopped by any of the officer within the state. This is the crux of your Rule 138. Recommend all of your clients, recommend all the transporters, wherever there is a verification, let that inspection report be uploaded, let that inspection report be given to the transporter, so that none of the checkpost people stop that particular consignment once again. This is one fantastic provision, 138C. Next, information regarding detention. Now, there is a vehicle which has been stopped by the officer. Why? He wanted to verify, he wanted to examine, he wanted to check the correctness. If the vehicle has been stopped beyond 30 minutes, this transporter has a mechanism to raise an alert, has a mechanism to intimate to the government that, look, my vehicle has been detained beyond 30 minutes without any reason. Any officer who is intercepting a vehicle without a proper, genuine reason, This can be escalated to the authorities using this particular form. Next, restriction on furnishing of information. Now, this is one of the major amendment which has come in e-way bill provisions. Now, friends, I would say, if you read the theory paper as theory, you wouldn't understand. Try to apply your theory in terms of practice, how it can help the businessman, how this knowledge can help the organizations where you're going to join with. Now, this particular slide explains that there is a blockage of e-way bill. Blockage of e-way bill. I'll give you an example. Now, assuming that there is a entry. Now, when I have to write my exam, I have to get into examination hall by tendering a document called hall ticket. Similarly, when I have to generate an e-way bill, my GST details have to be entered if I'm a registered person. I'll give an example. Most of the people take a registration under GST law for the purpose of obtaining business. The seriousness would not be there for filing of returns, payment of taxes. For that reason, government has brought in a mechanism for blocking of your e-way bill. This rule 138 talks about that. It says no person, including a consignor, consignee, transporter, e-commerce operator, or a courier agency. None of these people. Now look at that. They're saying that no person, consignor, the fellow who is shipping the goods, consignee, who is receiving the goods, transporter, who is a bailee, bailer, bailee. A bailee is a person who will not be permitted to generate this e-way bill. Or e-commerce operator. We will study this e-commerce operator little a while. We will hold that e-commerce operator concept. A courier agency. Transporter, courier agency, there is a thin line of difference. None of these people, what they say, shall be allowed to furnish the information in Part A of e-way bill. I would like to draw attention of you to this topic called Part A of e-way bill. Now, I'll give you an example for you to understand this concept. COVID time, most of you would have experienced many of the businesses have been affected. But there are a couple of businesses which have flourished, which have been brought up anyway. One of the business called your pan masala and tobacco. This is one business which has seen a big boom in terms of getting their sales. There was like COVID has brought a lot of things to a standstill position. People who have to drink on a daily basis, people have to smoke on a daily basis. There was a dearth of these supplies. There was a scarcity. These people who are doing business in this area, they were left and right carrying out business. Now, when you want to make the movement of goods, you know that e-way bill is compulsory. Reason, business to business. Manufacturer or seller. So manufacturer supplies to the buyer. This buyer could be a wholesale dealer, could be a retail dealer. When manufacturer is preparing the invoice, when he's sending the goods, in the e-way bill, my buyer details have to be mentioned. What is the buyer details? E-way bill. When e-way bill is there, it is a genuine purchase. Now, the officer will say, look, when the movement of goods happened from seller to buyer, what is the proof? Sir, look, there is an e-way bill. Now, e-way bill is one of the provision, one of the mechanism to prove that there is a movement of goods. Now, this e-way bill, the government said, I'm going to block. Why? If the seller or buyer have non-complied with the provisions. What are those provisions? Let us see. It says, a person paying tax under Section 10, that is composition registration, or a registered person who is supplying exempted goods. Either of these two people have not furnished their return in GST CMP 08 for 2 consecutive quarters. They're saying that a registered person who is registered under Section 10 or a person who is supplying exempted goods who have not filed their returns for consecutive 2 quarters. If there is a default in filing their returns for consecutive 2 quarters, my e-way bill is going to get blocked. Majority of the cases, the moment I go for Form A, Part A in GST e-way bill, Part A, the moment I put my GST number of supplier, his name and address is auto-populated. The moment I put GST number of my buyer, buyer's trade name and buyer's address is auto-populated. If at all, the buyer or seller has defaulted in filing their returns, my e-way bill portal has blocked from generation of e-way bill. That is what they say. If you say, sir, buyer in his login, it is blocked. Now, as a seller, I will raise the e-way bill, putting that gentleman's e-way in GST number. Lawmaker also has been clever enough saying that neither seller nor buyer nor transporter nor a courier fellow, none of them can generate an e-way bill on a registered person who has been a defaulter. This is a fantastic provision brought under 138E. So please bear in mind, whenever there is a default where either of these two people have defaulted in filing their composition return, that is quarterly return. This composition CMP 8 is a form where I pay the taxes under composition scheme. For 2 quarters, if I am not filed, then e-way bill is blocked. Sir, what if a person is other than composition? Then they say any other person other than those persons who we have talked, who has not furnished a return for consecutive period of 2 tax periods. Now, 2 tax periods, if he has defaulted in his filing his return, then the lawmaker says that I'm going to block their e-way bill. This is what the provision 138E talks about, your blocking of e-way bill. Means the part A itself is not permissible, then you cannot generate a e-way bill. So this is one provision which talks about your blocking of e-way bill. Now, what if there is a genuine difficulty? Sir, I have practical issues. Assuming that there is a company, this company has got a authorized person, a director. Now, when we go for GST registration, we will give the authorized person details, the director name, PAN number, Aadhaar number, his address, and his director DIN number, and then we will attach his DSA as an authorized person. Some reason, the board of directors have terminated this director abruptly. Now, this gentleman goes out of the company with his digital signature. Now, I don't have a DSA to file my returns. Now, when I go to the portal says, please amend your registration where your authorized person details have to be altered. Now, I need to have a DSA for that. Now, without DSA, I cannot do the changes. Now, there is a separate provision. I write to the GST officer, the proper officer, like this is a board resolution. This gentleman who is the authorized person left the company abruptly. Now, we are not in a position to file our amendment on the portal. Now, this is one genuine practical issue where my returns are delayed or filed belatedly. Now, these reasons, if I can put forth to my commissioner, lawmaker says that they will allow you to generate an e-way bill. So, if you have sufficient reason which is put forth to a commissioner, you will be permitted to generate e-way bill. Now, once a permission is granted under the state law, it is deemed to be granted under central GST, either of vice versa. Now, there is an explanation under this rule 138. It says a person who has not furnished the statement of outward supply for any of 2 months or quarters, as the case may be. Now, please bear in mind when we talk about returns, like next class, we are going to talk about returns. I have GSTR 1, GSTR 3B. So, which return you are talking about? This rule 138 says 2 months or 2 quarters, which is nothing but your section 37 GSTR 1. So, a registered person who has defaulted in filing his GSTR 1 for a period of 2 months, the blockage of e-way bill is going to happen. This is one provision. Majority of you who are doing your internship or who are going to get qualified and you're going to handle the assessors business for engaging filing of returns, I would strongly recommend ensure compliance in terms of filing of returns. Now, there are multiple penal provisions, demand and recovery. Sir, I'll file only GSTR 1. I'll not file GSTR 3B. So what is the difference? GSTR 1 is a statement where all my sales on a tax period, on a month, I have to disclose in my GSTR 1. GSTR 3B is a return where my taxes, my tax liability, what is shown in GSTR 1 is disclosed in my GSTR 3B. When we go to payment of taxes, we'll have a better clarity. So please bear in mind, mere filing GSTR 1, not filing 3B, you'll be held in the list called defaulter or a fraudster. So advise your client saying that don't do that. You file your returns called outward supply GSTR 1, also pay your taxes for a better compliance. Friends, now we will come to the core topic of today's discussion called accounts and records under GST law. Accounts and records under GST law. Any of you have any questions till now, whatever we have discussed, you can put into the question window. I can take it up one by one whenever time permits. There's one question from Jitin. What if the goods are there in the stock, which are received without e-way bill? Can purchaser take ITC or any penal provision? Very technical question and also logical or practical question, Jitin. For benefit of others, I'll repeat the question. Please understand carefully. What if the goods are there in my stock? These goods are received where there is no e-way bill prepared. As a buyer, I have taken my input tax credit on the basis of the bill. Now, when there is a departmental audit, is there a authority for the officer to demand to reverse the input tax credit? Now, answer to that question, Jitin. There is something called burden of proof. Under GST law, this provision called burden of proof, which says that, look, under section 155, it says, you as a registered person, I'll give you a benefit of input tax credit, but please prove that these goods are entitled for, will entitle you to take your input tax credit. So here, as a buyer, how do I know that e-way bill is required? Sir, the value of goods is more than 50,000. Sir, I'm ignorant. I'm innocent. Ignorance cannot be pleaded under the law. Sir, my contract is such a way, it's a CAF contract. I am a buyer. My supplier who is there in Maharashtra. Say I'm a buyer in Kerala. My seller, my supplier is in Maharashtra. I have placed a purchase order on seller on Maharashtra, CIF Kerala, say Thiruvananthapuram. Till the material reaches the factory gate of Thiruvananthapuram, it is the responsibility of my supplier. Sir, why should I be bothered with e-way bill? If something goes wrong, my supplier has to take a responsibility for that. So why should I generate an e-way bill? So please bear in mind, complaints, though it is at supplier end, you as a buyer, you have to instruct your supplier. Please ensure that there is a compliance with the law. Unless there is an e-way bill, please don't give a delivery of material. Sir, what if everything happened? Now ratification. Now please take a undertaking from a supplier. Let the supplier write to the buyer, this consignment worth so-and-so, supplied with so-and-so invoice. E-way bill has to be prepared. Erroneously, by mistake of law, I being a supplier, I have not generated e-way bill. I have made an intimation to my range officer. I would take due course with respect to these kind of movements in future course. So let there be intimation to the range office and that copy of intimation be given to you as a buyer. So why is this required? Reason, this section 155 says burden is on you. Burden is on you to prove that you are entitled for input tax credit. So to protect the interest of the buyer, Jitin, this is my answer. You get the reason why that e-way bill has not been prepared and get that ratified. Sir, if supplier is not traceable, all this cannot be done. Then you need to prove that there is a genuine purchase. I have a tax invoice, material was supplied by the supplier. The burden of e-way bill is not on me, it is on my supplier. Sir, what if it is a X-Works? From factory gate of Maharashtra, I as a buyer have to generate. Then section 122, penal provisions. We have a separate session, Jitin. I'll explain in detail how the law officer is going to demand your non-compliance related penal provisions. 122 read with section 125. So we'll cover in detail in that particular clause. Exposure, answer for your question. Yes, there is an exposure. Now, friends, coming back to our today's topic. This topic, accounts and records under GST law. Please put the heading accounts and records under GST law. Section 35, comma, Rule 56. So when we read this provision, I need to read these two provisions together. I have to read Section 35. I also have to read Rule 56. So we are professional chartered accountants. If someone talks about books of accounts, if someone talks about records, we are experts in this area. We know everything. Please bear in mind, the taxation could be your direct tax, could be your indirect tax. Read the tax laws the way those laws have been drafted for ensuring compliance. The objective of the lawmaker is always different from your books of accounts which are prepared under the GAAP, generally accepted accounting principles. A simple example, fixed assets register. Sir, as per my Companies Act, being a company, I have to claim a depreciation. There is a schedule, there is a procedure prescribed under Companies Act. I prepare my fixed asset schedule. So is that good enough? Now, GST law, they say fixed assets has got a life of 5 years for the purpose of availment of input tax credit. So, friends, when we talk about life of fixed assets, my Companies Act life is different. My income tax life is different. GST law, ITC, input tax credit, they presume that life is going to be 5 years. Section 18 of CGST Act, which talks about how to compute the proportionate input tax reversal when there is a discarded or selling of a fixed asset or a capital goods. So from that point of view, I would say read your provisions the way the intent of the law has been set. I'll take you one by one to make you better understand with respect to these books of accounts. To start with, first and foremost, production or manufacture of goods. They expect you to prepare production or manufacture list. People who have exposure to central excise, majority of you who are listening to me, you have joined your internship 2 to 3 years back. You would have seen GST law. You wouldn't have seen central excise law. This is one concept which is carried from central excise law as it is. Under central excise, we had this concept called daily stock account and RG1 register. There is a register where I have to prepare on a daily basis what is my opening stock, what is my manufactured goods during the day, what is my sales during the day, what is the scrap during the day, what is the closing stock at the end of the day. Now, this is an expectation which is there in a central excise law, which has been carried into my GST law as it is. So first and foremost, they say, if you are a registered person, you are doing a manufacturing activity or you are doing a production of goods, processing of goods, please maintain a record to track what is your goods manufacture. Means what is your opening stock, manufacture, dispatches, closing stock. So should I need to prepare on a daily basis? Answer is absolute yes. A simple question to you who are experts in statutory audit, who are experts in income tax. When you are asked to prepare a closing stock, when you are asked to prepare the inventory valuation, how do we prepare to the inventory valuation? I will say, this is my opening stock, purchases or manufacture, sale, closing stock. Now, when you look at the manufacture activity and sale activity, now this data, this information has to be collated, has to be taken from your ERP or a Tally or SAP. The entries should be done on a real-time basis. Only then your inventory records are up to date. Another example, you as an auditor, you as a statutory auditor, when you do verification of inventory, you say, I want to take a verification of my finished goods. Now, the moment you say finished goods, you will say, what is your opening stock, manufactured during a period, sale during the period, and my closing. Only when that is prepared on a real-time basis, on a daily basis. So answer to the question, the inventory records in relation to production and manufacture have to be done on daily basis. This is something which is expected from your production or manufacture of goods. Moving to a second point. Inward and outward supply of goods and services are both. Inward and outward supply of goods and services. Law says, please maintain a track of what are the goods which are inwarded. When I say inward, the goods which have come into my factory, the goods which have come into my business premises. What is that inward? On account of purchase, on account of job work, on account of sample as a agent. Now there are goods which are coming into my registered premises. That is happening by way of a bill, by way of a tax invoice, by way of a delivery challan, by way of a bill of supply. What they are saying, keep a track. What all material you are receiving into your registered premises, you call that as inward supply. Next is your outward supply. You have to maintain a track of what outward supply is happening. Supply on account of a tax invoice, supply by way of a delivery challan, not by way of a sale. So they wanted to say, what is the track of inward of goods? What is the track of outward of goods? Sir, perfectly good. I've understood for goods. Services, what do you expect from me? You're saying inward supply, you're saying outward supply. They wanted to say, you maintain a register called your purchase register. You put down in your purchase register who is your service provider, name of the service provider, address of the service provider, GST number of the service provider, invoice number, invoice date, description, what is the nature of service, is it what is the place of supply, what is the taxable value, what is the tax, ICS. Now, is this inward supply, the tax, what you have mentioned, should I pay tax on forward charge RCM basis, or is my service provider paying tax on forward charge basis? This is what expected from the GST law. Friends, you read the theory, it looks like a theory. But when you get into the practice of compliance management, this is something which is expected. The question comes here. So 99.99%, none of the cases I've seen assessing maintaining these details. Friends, I would draw your attention to the books of accounts. Majority of these companies, they say, so you pull out my purchase register. I have configured everything into my purchase register. It has got details of my supplier name, supplier address, GST number, invoice date, the description of good, like the GL which I have selected, and the IGST, CGST, SGST. So everything is there. Now, can I call that as a register? Answer is yes, that is a register. This register, if it is available, extract that register and maintain that on a periodical basis. I'll come to that physical form, electronic form in a later. Next is your stock of goods. My stock, when I say, it is nothing but inventory, raw material, finished goods, traded items, capital goods. Now you need to maintain inventory of these items. This stock of goods, it is not required for a registered person under Section 10. Composition scheme, no need to maintain inventory. Other than composition, yes, you have to maintain your inventory. Next, input tax credit avail, output tax payable. As I said, they expect you to maintain a register for input tax credit avail, output tax paid. So what is expected? When I say input tax, name of like you should have a running serial number, the month for which this is an inward supply. What is it supplier name? What is the GST of supplier? What is the supply? Is it goods, services, or is it capital goods, inputs, or input services? Then HSN or SAC, your description of goods and services, taxable value, ICS, and place of supply. Finally, what is a tax payable? Is it on forward charge basis by the supplier or RCM by my end? These details are expected input tax, vice versa in output tax. This is some information required. Such other particulars which we will go through in a while. So friends, please bear in mind, now this is one slide which is completely going to explain this concept called maintenance of accounts and records under the GST law. First and foremost, inward, outward register. My purchase register, my sale register. So what about job work? I have a job work activity done. Should I need to call and maintain that also in inward register? Answer is a big yes. When the goods are received at your end, one of the question asked by your friend called Jatin. I'll extend the question of Jatin little more this way. Sir, I have received material on a delivery challan. I have not kept the delivery challan at my end. I repeat, sir, I have received the goods using a delivery challan. Example, take example of your beverages, soft drinks, Coca-Cola, Pepsi, or any other branded soft drinks. When you walk into a particular restaurant, there is a refrigerator. There's a display of soft drinks in the refrigerator. Now, the business to run more, I have to attract customers. The moment someone walks into a store, there is a display of soft drinks. That soft drinks should be cold. Unless it is cold, consumers will not consume that. Now, when I look into that refrigerator, only those brands like Pepsi, Coke only available. The other brands are not available. Now, it is not that I have to not sell, though other brands are sold, but it is kept in somewhere other location. Now, I'm drawing the attention of my customer. Now, in this example, refrigerator, assuming the entity called Coca-Cola has given a refrigerator to me, I'm a dealer. Now, is the Coca-Cola selling a refrigerator to me? Answer is a big no. It is not a sale. If it is not a sale, Coca-Cola will not raise a tax invoice on me. Now, how can the refrigerator can come into my place? A transporter. Now, transporter will say, so the value of refrigerator is more than 50,000. Unless the e-way bill is there, I cannot move this thing. So what that supplier will do? He will not raise a tax invoice. He will prepare a delivery challan. So delivery challan is there, e-way bill is there, refrigerator has come into my premises. Sir, I feel that this delivery challan is not relevant. I just signed and put it somewhere and I didn't record it in my file. No, question comes here. When there is an inspection by the GST officer, can the GST officer question that these are the goods which are there, which have been supplied by you or which have been supplied with a malified intent of evasion of tax? Now, this is something which could be tested from the officer, the GST officer. So this is one example, extension of what Jatin asked a while ago. If there is an inspection for goods where that doesn't have a backup paper, if it's a purchase, tax invoice will be there. If it is other than purchase, please ensure that the delivery challan is retained with you to ensure that the authenticity of these goods lie not with me, with someone else. So friends, this is expected from your inward outward register. This is a starting point. Next. Stock register. Now, this is something we have discussed. Like when I say stock register, typically raw material, finished goods. In raw material and finished goods, what is your opening stock? What is your inward? What is your outward? What is your closing stock? My stock register in whatever stock I have accounted as inward, for every in, there should be a corresponding bill. I should know who is my supplier. What is the supplier? What is the quantity supplied? How my inventory has been updated. So this is one area. Most of you are familiar with your statutory audit. One core area which teaches a lot with respect to your costing, internal controls, and your taxation, indirect tax, is your inventory valuation. When you look into your raw material register, when you look into your raw material report, you'll get many things into that raw material report. I have stock of 100 accounted as in. This 100, I'll have an inward entry called 80, bill is there. Inward entry of 20, adjustment. How? Supplier has given 80 on a bill. Supplier has given 20 as a sample. Supplier has given 80 on the bill. 20 is given as a sample. That could be an adjustment entry. Sir, what if we did a stock verification? In the stock verification, my book stock shows 120. Physically, I have 150. So my book stock shows 120. Physically, I have 150. How is it possible, sir? Physically, I have 150. So I have noticed that the previous day, the accountant has punched an entry of 30 units more than the actual consumption. When I'm taking my raw material from stores area to production, punching should be done for 50. Instead of 5, 8 was pressed. So my inventory got reduced by 30. In my ERP, 30 entry got posted where physically there was no movement from stores to the production area. In the process of verification, I noticed that 150, 30 quantity was lying on the shop floor, which I have to again bring it back to my inventory. If I don't bring, inventory valuation goes for a toss. So I'll do a adjustment entry. So you'll get all these things when you thoroughly review your inventory valuation. So those people who are doing your statutory audit or internal audit, please focus on this area, which teaches many aspects. Coming back to our law, stock register, other than your composition, my raw material, finished goods, they expect you to maintain opening stock, what is in, what is out by way of a sale, out by way of a sale, or out other than by way of a sale. This is what they expect you to maintain in your inventory. Then finally, what is your closing stock? This is something what they're expecting in your inventory. Next aspect, accounts of advances. Now, again, I draw your attention. Please don't be in a virtual mode. Accounts under GST law doesn't mean that what is there as per IGAP. Whatever you have maintained as per your generally accepted accounting principles, that is not the accounts as per the tax laws is concerned. Now, audit is one area which is getting started. Many of you are going to complete your examination and come into your qualification, post-qualification, into practice or industry. Audit is one area where you will get exposed to these records. Accounts of advances. As a process of my business, the lawmaker says, please maintain a accounts of advances. Please maintain a register. Every tax period, every month, I need to maintain this register called advances. I need to list down from which person, which customer I have received advance. Please recollect, write down in your working note, section 12, section 13. Time of supply for goods, time of supply for services. Though time of supply for goods is linked with my tax invoice, not linked to advances. My services alone, time of supply is linked to my advances. Now, lawmaker says you have to maintain your account for advances. What is your business? Is it supply of goods? Is it supply of services? Is it supply of works contract? Supply of goods and services, whatever it is, you maintain a register called advances. Every customer in the month, when you receive an advance, put the date on day wise, name of the customer, GST number of the customer, amount received in advance, nature of supply, goods or services, rate of tax, 18%, 12%, whatever is the rate. Then HSN or relevant service accounting code in relation to supply. Is it supply of goods or supply of services? Then what is your place of supply? Then what is your relevant tax? IGST, CGST, SGST. I need to update these details in relation to my accounts of advances. So friends, lawmaker says that you maintain a register for advances. Next, tax details register. As we have discussed, input tax, output tax. My lawmaker says, please maintain this input tax register, output tax register. So what is the expectation of this? Lawmaker wants to understand every bill, whatever supply you are making, that is your outward supply. Please maintain the details, name of the customer, address of the customer, GST number, invoice date, nature of supply, goods or services, HSN or service accounting code, rate of tax, place of supply, IGST, CGST, SGST. This information they wanted to track. Friends, I also request you go one step ahead. Is the supplier into trading activity, manufacturing activity? If he is a trader, put the reference to your traded inventory. If he is a manufacturer, link the reference to manufacturer inventory. This will help you in terms of tracking your inventory for the supplies made. Similarly, purchases. When I have taken input tax credit, they wanted you to maintain this. There is a technical issue.
Just give me a minute. Sorry, friends, there is a technical issue. Please confirm you are able to see my screen and you are also able to hear me properly. Friends, there is a technical issue. Please confirm, are you able to hear me and also you are able to see my screen? Once you confirm, I'll go ahead with my discussion. Let me have a confirmation from any of you. Hope you are able to see my screen and also you are able to hear me. Once you confirm, I'll go ahead with my discussion. Okay. Now, next aspect in our discussion is your vendor and customer. Lawmaker says, please maintain the inventory for your supplier and customer with the address and information. What is the name of the customer, from where, what is the GST number, and what is the name of the supplier, what is his address. This basic information in relation to your vendor. Next important aspect, details of place of storage of goods. Lawmaker says, you keep a inventory. You have a possibility to store the material at your registered premises, or if there is no sufficient place, where else you store your material. If there is an additional place of business, please record that as your additional place of business and where that material is stored. Finally, your production of manufacturing activity. So friends, this is a total gamut under GST law where they expect you to maintain your inventory. Now, Section 35 says every registered person should maintain the details of shall keep and maintain at his principal place of business. Now, when I have obtained a registration, there is a certificate of registration. The place which I have called as certificate of registration, that particular place, you maintain your records, all your registers. What is that I have to maintain? True and correct account of all accounts and records. So here, lawmaker says, when you have obtained your registration, all your books of accounts, what is expected as per Rule 56, expected as per Rule Section 35, should be true and correct. True and fair, true and correct. In auditing, we would have studied what is true and fair. When we do audit, they give us a report saying that everything is true and fair. We will not say true and correct. When I say true and correct, every minute aspect which is reported in that particular certificate should be verified, watched, and authenticated. Authenticity, you should say it's correct. So most of the reports, our audit reports, are true and fair. But with respect to books of accounts, it should be true and correct. Office lawmaker doesn't say it should be true and fair. It says true and correct. So I have to ensure that my registers which are maintained, are true and correct. Those registers should be maintained at my principal place of business. Further, when I have more place of business, more than one registered place of business, I call technically as additional place of business, APOB. One is principal place of business, another is additional place of business. As per your registration certificate, there will be one principal place of business. There could be additional place of business. So wherever you have additional place of business, which is there as per your registration certificate. So if you have more than one place of business, at every such place, you have to maintain the accounts relating to that particular place of business. So lawmaker says, as per your registration certificate, you have one address. At that address, you maintain your books of accounts. Sir, I have multiple units. Then at multiple units, I need to maintain this records. Those records can be maintained in electronic form. I can maintain those records either in physical form or in electronic form. I can maintain that records either in physical form or electronic form. This is the basic expectation as per my section 35. Now, let me come back to my Excel file to make you understand this with little more with an example. Hope you are able to see my Excel file. I'll give you an example. So there is a agency called Mrs. ABC and Co. This is an entity. It's a partnership firm. This entity is a partnership firm. So this entity is into the business of sale of motor vehicles. So this firm, say it has got a head, say in the state of Tamil Nadu. I'll take example of Tamil Nadu. This entity is registered in the state of Tamil Nadu. Now, assuming they have their operations in Chennai, Coimbatore, and let me take one more place called Madurai. Now, what we say, motor vehicles. Chennai, they will deal with two-wheeler. Coimbatore, they deal with four-wheeler. Madurai, service for all two and four-wheeler. Now, if you look into the nature of business, they are registered in Chennai, they are registered in Coimbatore, they are also registered in Madurai. Now, all put together, one registration, not separate registration, all put together, one registration. Now, when I have three places, I can call one address as principal place of business. Other I call as additional place of business. One I'll call as principal place of business. Other two I call as additional place of business. Now, sir, where do I get all this information? Your registration certificate. Now, so what is expected as per the law, section 35? At each these place, I have to maintain. Now, when you look about records, stores, I would say stock register. Here also have to maintain stock register. Here also have to maintain stock register. In two-wheeler, I buy and sell, so I have stock register. I have to maintain your tax paid and collected. Tax paid to my suppliers, collected from my supplier. I have to maintain the same registers even to other locations. Then, so what about your advances? Advanced register, answer yes. Here also I have to maintain. Now, when I say everything I have to maintain, the question comes here. The qualified CA comes and says, so why do you want to break your head? I'm going to give you a ERP which has got integration. All the 3 units, 3 locations, I can bring into one ERP. Don't worry, it is taken care. The question comes here, the ERP is maintained in Chennai. What will I do in Coimbatore? What will I do in Madurai? When a tax officer comes for inspection in Coimbatore, can I say to the tax officer, my good officer, we have an accounting software in ERP. It is maintained in Chennai. Kindly take my inventory register. Kindly take my advance register from Chennai. Can I say so to my officer in Coimbatore? So when there is a physical verification, where in my Coimbatore, so if the officer comes for a physical verification in Coimbatore, is it good for me to say, so please visit Chennai? Everything is there in Chennai. Don't come here. Answer is no. I'll come back to my slide where my law says, please update your records at every additional place of business. You have to maintain your records at registered place of business. If there is a business activity in additional place of business, those additional places of business, you are expected to maintain your records. This is what my section 35 says. Hope you are clear with this particular aspect. Now, let me see if there is any further questions. Okay. There is one question from Harsh. Harsh, I have answered to this question at the beginning of the session. Okay. When we have discussed all these aspects, there is something called the challenges in terms of maintaining these aspects. First aspect called SION. In customs law, DGFT provisions, we talk about SION when there is a duty drawback fixation, rate fixation. Standard input output norm. This standard input output norm we use in our costing where we talk about marginal costing, variance analysis. Variance analysis. What is my standard production? What is my actual production? Standard input output norm. So when you have manufactured the goods, what is your standard? What is your actual? When there is a variance, how do you deal with that variance? Especially in terms of scrap. This abnormality in production is considered in terms of your scrap generation. So why is it relevant? This is linked with your input tax credit. This is linked with your assessment. I'll come to this when we deal with your assessment provisions. Stock adjustment entries, I gave example with respect to physical stock available, wrongly punched in my stores, where we do the adjustment entries. I have to carefully analyze from the law point of view. There should be a proper justification for those adjustment entries. Clarity on advances. So when I have received advance, the other day, first day, when I was talking about advances, I have said that whenever I receive my advance, I need to determine whether it is in relation to supply of goods or supply of services. If I don't have a clarity with respect to rate, 18% is the rate. If I don't know whether it's an intrastate supply, interstate supply, law says, please consider that as a interstate supply and pay your IGST on that. This is what expected as per my Rule 56. Then details of supply and customer, we have ensured. ERP, we have just discussed with one example of Chennai, Coimbatore and Madurai. Then documents for input tax credit. Now, this is one important aspect. Wherever we have to pay tax on reverse charge mechanism, your section 9.3, notified list of goods and services, section 9.4 in relation to your real estate sector, where there is a list of supplies on which I have to pay tax on RCM. Lawmaker says you have to have a bill, your tax invoice, debit note, credit note, for ensuring that what taxes you have paid is matching as per your returns file. First and foremost, those details should be true and correct. The concept of true and fair is not applicable for my books of accounts. When I'm supplying, where there are supplies which attract tax on RCM, lawmaker says that you maintain your register for your inward supply. In that inward supply, please update. Tax should be paid on RCM, yes or no. That is expected. Now, this third limb is one limb. I draw attention to most of you who are going to be a future chartered accountants from your audit point of view. This is something very, very important for your audit. When you go for an audit, you have to ensure that there are invoices on which I have taken input tax credit. There are bill of supply which are issued by my supplier on which I have not taken input tax credit. Why? I draw attention to question asked by Jitin to prove that wherever inventory is there, I have to correlate that goods in my inventory with my purchases. If the inventory is there without bills, officer has a right to demand tax on that, presuming that it is a supply made by the registered person. I'll give you an example. Sir, I have received 100 pieces. Along with that, I have received 10 pieces as stock, as a what you call warranty replacement, or as additional gift items. Sir, if I don't maintain inventory for that, will something go for a toss? Answer is, lawmaker says, look, those 10 pieces were presumed to be a supply made by you. I will recover tax on that particular 10 pieces if you don't justify with a bill. This is what the lawmaker says. Ensure that all material which you have in your inventory, you have a supporting document for that. Importance of delivery challan. Where material have come for job work, where material have come on a delivery challan. Example of refrigerator. I gave you an example of a refrigerator of Coca-Cola. As a seller, when my Coca-Cola has given me a refrigerator, I need to have authenticity to be established that it is not purchased by me. I also need to ensure that that was supplied to me as a free of cost on the basis of a delivery challan. Credit note, debit note. Now, last class we have discussed on credit note, debit note. Now, this is one particular point which is very important, which has a mechanism to reduce my output tax, mechanism to increase my input tax. So when as a buyer, when I reverse my input tax credit, I need to have a corresponding credit note. As a buyer, when I take an input tax credit on a supplementary invoice, a debit note is compulsory, I need to have. Then lawmaker is expecting you to issue a receipt voucher when you receive advance, to issue a payment voucher when you pay advance to your supplier. Receipt voucher for advances received. Payment voucher when I make a payment, advance payment to my supplier who is not registered under GST law. And a refund voucher where there is a money received in advance has to be returned back to my customer. So these are all basic aspects which we need to ensure are registers which have to be updated. Now, inventory, we have discussed in detail. This aspects of completeness, when I'm preparing my purchase register or output tax register, they say you have to update the address and complete bill details from where I have received to whom I have supplied those goods. Everything I need to update in clarity. Implication for non-disclosure of place of business. Now, this particular provision says, if any taxable goods are found to be or stored in a place other than those declared in my registration certificate, where there is no invoice or documents available, then the officer has a right to determine the amount of tax payable on such goods as if such goods have been supplied by the registered person. Now, this is one provision where it says, if there are taxable goods which are stored, like refrigerator, which I'm saying, those goods are found in the process of verification, where there is no valid document, then the profit officer has a right to determine the amount of tax on that particular goods, which as if it has to be paid, as if it has been supplied by the registered person. So please ensure that all the material where you have stored, you have a proper bill or details disclosed on that. If the bills are not available, it is deemed that it is a supply made by you and they recover tax from you. Next. When you are in the process of preparation of your inventory records or your tax invoice, etc., what is that law expects from you? If you are maintaining your documents manually, it should not be erased, it should not be effaced, it should not be overwritten. These days, everything is electronic. Now, electronic, there is advantages, also a disadvantage to that. Now, when I make an entry in my ERP, when I make an entry in my SAP, there is an audit trail called system log. There's an audit trail called system log. Means when an entry has been posted is recorded in my inventory, my what I call software. Lawmaker says, please maintain, update your registers neatly. It should not be effaced or overwritten. Now, in ERP environment, nothing can be hidden. There should not be incorrect entries, or there should not be clerical entries like inventory stock taking. We said as per my ERP, 120 stock are there. Physically, 150 is there. So why is that there is a difference? So my accountant, my stores person wrongly punched entry of 80 instead of 50. Now, to establish that, we need to have supporting documents established. Now, further, the details should be attested. All physical records, there should be a, whenever there is a correction, that should be over, whenever there is overwriting, that should be attested. I'll give an example. Sir, I have received a bill. I have in the state of, say, Bihar, I have 3 places where I'm registered. Now, Unit 1, Unit 2, Unit 3. My supplier has supplied goods to Unit 1. Erroneously, has mentioned the address of Unit 2. Now, when I have accounted input tax credit, I cannot say goods have received in Unit 1, bill is addressed to Unit 2. I cannot say, because when there is an audit, I have to establish. So when I take this issue to my supplier scores of that Unit 2 and he writes by hand Unit 1 address. He'll put a seal and signature. This is what they say authentication. If there is any clerical mistake, authenticate that particular clerical mistake for whatever corrections you do. Now, this is a point which is applicable in relation to auditors. Most of the cases, whenever there is an inspection, verification, etc., always the client says, sir, the books of accounts are with the auditor. The details are available with the auditor. Now, auditor's office is not additional place of business. Please bear in mind, registration certificate of the assessee, nowhere they disclose the tax auditor or the chartered accountant office as additional place of business. The auditor is there to audit. The auditor is there to support in accounting function. The registers which have come to auditor's office is only for accounting purpose and not to maintain registers on behalf of the assessee. Unless proved otherwise, if any documents or registers or books of accounts belong to a registered person are found at a premises other than the premises which is mentioned in the registration certificate, it shall be presumed that this additional place of business is maintained by the said registered person. Means the auditor's office is going to become the additional place of business. That place is presumed to be maintained by the registered person for his business purpose, where there is a burden to prove on the registered person. So whenever you get those documents, please inform the client. This is meant only for accounting purpose, not for otherwise. Don't hold me responsible as an additional place of business. Whenever there is a raid or any inspection or audit at the client, let that for manpower not be rushed to the auditor's office as if this is my extended office. No, this has got only a service window. It is not a window for maintaining records on behalf of the assessee. Now, in relation to works contract, the law says every place where there is a works contract performed, please maintain the details of the place where the works contract is executed. In that particular location, what is the inward of material or what is the inward of services? Lawmaker says you maintain those details of the value of goods, the value of services which are required for that works contract, which have been received. Out of that material, what have been consumed, what have been left out. End of that, what is the work done, what is the bill raised, what is the money received from that particular person. So typically, this works contract is one area of interest. Not many of the people practice in this real estate. This is one area, a lot of exposure, a lot of clarity, conceptual clarity is required. So the law says for every works contract, please maintain a track. What is a works contract location? What is the inward of material at that location? What is the material consumed for that works contract? What is the unconsumed material? What is the advances received from that site? What is the bill raised at that particular site? Now, this is one area where clarity is expected, works contract order specific to maintain the inventory. I'll give example of L&T. L&T, let's take example of Maharashtra. In Maharashtra, see, they have 40 projects being executed. They'll have a central warehouse, say in Pune. From Pune, wherever there is a work being performed, supply of cement or movement of cement, steel structures, or any other consumable items happens to the site. Now they say site specific maintain the inventory. What is the in at Pune warehouse? From Pune warehouse to each location, what is the metal movement? Please maintain an inventory. In at that location, out at that location to the site. Reason, when we look at the registration certificate of L&T, they'll have all those added as additional place of business. Why? From Pune, when I keep, like example, say your international airport, which is there in Mumbai, if I have to do some work, civil work at that international airport, material cannot be stored at airport without permission of the law. The moment I keep the material, that will be deemed to be a supply. Now I'll add that as an additional place of business for the works contract which is being performed. Otherwise, I cannot raise a tax invoice unless the work is done. The moment I raise a works contract, the invoice, it is deemed to be the ownership passed on to the airport authorities. So that is how works contract, they expect you to keep a track of all those additional places of business, inward, outward, and build. Next aspect is relation to your warehouse operator. Majority of the people, ignorance of law. This is the point which, being a professional chartered accountant, we need to guide to the assessee, to the business person. Warehouse operator, be a person who is not registered under GST law. However, the GST law has defined under section 35, read with rule 56. Section 35 clearly says that a person who is running a warehouse operator, every owner or operator of a warehouse or a godown, this owner, operator, or a godown may be registered, may not be registered, or whatever be the name, which is used for storage of goods, or every transporter who using that godown for transportation of goods, irrespective of whether they are registered or not, they shall maintain records of the consignor, consignee, relevant details of the goods in that manner. They say you maintain this information of consignor and who is the consignee and in relation to goods. Now, basic expectation, majority of the cases, wherever there is a warehouse being operated, they need to maintain which vehicle has come, vehicle number, registration number. That vehicle has come for storing of goods. What is the goods? Tax invoice, delivery challan, bill of supply. Who is the consignor? From where to where? What is the material which is loaded in that material? Inward entry of vehicle, inward entry of material. Outward entry of vehicle, outward entry of goods. Everything needs to be recorded by that warehouse operator. Now, this is one hardcore concept. If you see that Delhi NCR region, if you see in Chennai outskirts area or Thiruvananthapuram outskirts area, all these city extension of the cities, you have these big warehouses which are called extended warehouse. Now, this is a concept where the manufacturer, when there is a scarcity of production area, he is not getting that next to adjacent area, then he goes with this concept called warehouse. In that particular concept, his material will be kept in the warehouse where the owner of the warehouse is expected to keep a track of this material. Now, the registered person will add this as a registered warehouse as an additional place of business in his registration certificate. Also, as a owner of warehouse, when a vehicle is coming in with material, when vehicle is going out with material, lawmaker is expecting that they maintain these three information: consignor, consignee, and details of the goods concerned. This is the expectation out of my registered operator. Next, a commissioner can notify some class of peoples for additional details of documents, or he can give a permission not to maintain any details thereof. Now, accounts to be audited by chartered accountant, cost accountant, section 35. This has undergone a major change after this recent budget for your May 2021. May 2021. Expect a theory question for 2 marks from this particular concept called audit by a chartered accountant or a cost accountant. This is a sunset clause. This is a sunset clause. When we talk about returns under GST law, annual return, I will touch in detail about this particular arena. As of now, section 35 says that every registered person who have a threshold limit of turnover exceeding a specified limit, as of now, the threshold limit has been set for 5 crores. Earlier it was 2 crores. Now it has been set for 5 crores. And this is a sunset clause for financial year 1920. For year May 2021, this area, because this is the last attempt where this question can be expected, be prepared for section 35, audit of books of accounts under GST law. When we talk about returns, I'll explain in detail. As of now, please understand that every registered person whose aggregate turnover exceeds a specified threshold limit, they need to get their books of accounts audited by a chartered accountant or a cost accountant. Now, also the law says that registered person, if the books of accounts are audited by Comptroller and Auditor General, C&AG, if any of the government undertakings, their audit is done by C&AG, no audit to be done by a chartered accountant or a cost accountant. Now, if there is a failure to maintain books of accounts, then my penal provisions under 73-74 will be triggered. When we deal with demand recovery, I'll explain in detail how this penal provisions will be attracted. Now, retention of books of accounts as per the law, as of today, the law says that from the date of filing of your annual records, you have to maintain the books of accounts till a period of 72 months. Now, this is a big move, where law says that you need to maintain the books of accounts for a period of 72 months from the date of furnishing of your annual return. So annual return under section 35 read with section 44, I'll discuss in detail. As of now, please understand retention of period of books of accounts. The time limit is 72 months. It is not 5 years. It is not 6 years. It is not the years. It says 72 months. So from where? From the due date of furnishing of your annual returns. From the due date of furnishing of your annual returns. Next, we'll move on to the important, now this concept of retention of accounts, I'll discuss in detail when we come to the returns part. Now, let us start with the important topic of today called payment of taxes. Examination, friends, expect one question for 6 marks, 4 marks from a problem, 2 marks from a theory. This is one hardcore topic from your examination point of view. So, coverage expectation from payment of taxes. This law there is one question. So Sai Priya says recorded classes are not coming. Okay, I think there is a technical issue in between. It has been set right. Supriya, Suraj says I am not able to see past classes are not available. Okay. If audit by, okay, there is a technical issue at ICAI. They have been working on this YouTube recorded videos. Don't worry. Institute is going to set back on this thing. There is one question from Jitin. Whether e-way bill is required if debit or credit note value exceeds 50,000. Jitin asked a question, sir, is there a e-way bill required where a debit note or credit note value is exceeding 50,000? Now, to answer that question, Jitin, e-way bill is required only when there is a movement of goods. If there is no movement of goods, then e-waybill is not required. Debit note, credit note is a mechanism for adjustment of value. If the price is charged more than what it needs to be charged, then e-waybill is not required. So what if the goods are returned? Sale happened, the goods are returned back. In the process of sale return, where there is a movement of goods, where I issue a credit note, yes, e-waybill is required. In case of price adjustment, in case of deficiency of goods, e-waybill is not required. So to answer your question, Jitin, only in case of a sale return, e-waybill is required. Then there is one more question. Okay. Jitin says, in which section it is told stock register is not needed for composition? Jitin, refer Rule 56. In Rule 56, it talks inventory records are not required to be maintained by a composition registered dealer. Section 35 doesn't say specifically, Jitin. Rule 56 talks about that. So answer to question, Jitin's question, reference to Rule 56, the inventory records are not to be maintained by a composition person. Saipri, I have answered to your question. Then one more question. Harsh says, if audit by CA provision is redundant, then does it mean more pressure would be on GST officers, or does the law will rely on taxpayer? Fantastic question. Harsh from Mumbai says, if the audit is made redundant, will the tax officer have more pressure on this reliance on books of accounts? And will the lawmaker rely on taxpayer? Now, answer to this question, Harsh, it is a very tough question. Reason, yes, without set of books of accounts and audited set of books of accounts, there is no way lawmaker can draw conclusion with respect to your tax payable, with respect to your purchases. This provision which has been made redundant is going to create a lot of chaos in times to come with respect to departmental audit. Only we need to wait and see how the officers are going to really test and rely upon the taxpayer. Practically, yes, Harsh, this is going to create multiple exposure to get the audit concluded from the department point of view. This is one question. We need to wait and see how the department is going to come out with an alternative mechanism with respect to this audit mechanism. Coming back to our present discussion, payment of taxes, we will have end of this discussion understanding on various ledgers called electronic credit ledger, electronic cash ledger, electronic liability ledger. People who have audit exposure under GST law, well and good. People who are listening to GST classes, people are getting exposed to GST only theoretically, please make a note in your running note. Electronic cash ledger, electronic credit ledger, electronic liability ledger. Now, cash ledger, electronic cash ledger is as good as my bank account. The money which is there in my bank account, the money which I deposit into the GST portal for payment of taxes. You can write ECL, electronic cash ledger hyphen money deposited by the taxpayer, or money deposited on behalf of the taxpayer hyphen for payment of taxes. Next, electronic credit ledger. Write down electronic credit ledger. Now, this electronic credit ledger, how does it get updated? Input tax credit updated under section 41. Input tax credit credited to electronic credit ledger. I repeat, input tax credit credited to electronic credit ledger under section 41. Under section 41. When a return is filed. Now, so what is that section 41? This section 41 gives you a benefit of input tax credit on a provisional basis. I draw attention of the viewers, the faculty who already has covered input tax credit. So this section 41 says, whenever you have accounted something as inward supply, something as purchase, on that purchase, if you have availed input tax credit, when you file your GSTR 3B, in GSTR 3B, there is a table called 4A. Now, people don't feel more technical. This is something which comes out of your practical exposure, practical experience. For future chartered accountants, please understand, even if you don't want to practice, this is a basic concept. When I file my GSTR 3B, when I file my return called GSTR 3B, that return updates my electronic credit ledger. How? On a provisional basis. What is a provisional? Section 41. So electronic credit ledger updated by me. Who is me? Registered taxpayer. Electronic cash ledger, when is it updated? Again by me, when there is a deposit of cash. Credit ledger, when I file my return. Third, electronic liability ledger. So what is electronic liability ledger? Whenever I file my return, I disclose that this is my details of supplies made during a tax period. GSTR 1, section 37, outward supply. When I declare my outward supply in my GSTR 1, that gets auto-populated into my GSTR 3B. Now, this 3B is a mechanism, is a window which is fixing my tax liability. My debit in electronic liability ledger, I repeat, my debit in my electronic liability ledger happens when I file my return. So, I deposit money, credit cash ledger gets credited. Please put a ECL. Cash ledger, T account. Credit ledger, T account. Liability ledger, T account. Now, cash ledger, the moment I deposit cash into my GST number, it gets credited to cash ledger. The moment I file my returns, where I take my input tax credit gets credited to credit ledger. The moment I file my returns, my tax payable gets debited to liability ledger. So now you have all the T accounts with you. Credit in cash ledger, credit in credit ledger, debit in liability ledger. How do I pay taxes? I pay my tax using cash ledger or credit ledger. Please understand, not a rocket science. This is something which is going to be tested in your examination. Now, if you visualize your T account, what you have written already, liability ledger has got a debit entry. Now, to pay the tax, I should credit my liability ledger. My debit in electronic liability ledger can happen using cash ledger or credit ledger, right? I'll debit my cash ledger if enough cash is there. I'll debit my credit ledger if enough credit is there. So the debit entry in cash ledger or debit entry in credit ledger is going to get credited to my liability ledger. This is called payment of taxes, right? There are three ledgers, what we have understood. Next is your payment of tax. Payment of tax is nothing but the debit entry in my credit ledger or cash ledger, credit entry in my liability ledger. So what if I have paid tax later? Money I have paid beyond the due date. Interest comes into picture. Section 50, very, very hardcore topic, which will be tested in your examination. My interest calculation comes when there is a delay in payment of tax or shortfall in payment of tax. I repeat, my delay in payment of tax, shortfall in payment of tax. I'll take you to my Excel to make you understand this concept called interest. Let me know you're able to see my Excel file. Hope you are able to see my Excel file. Now, when I talk about payment of taxes, there's one thing we need to understand. Payment of taxes within due date, after due date. Now, when I pay taxes within due date, no interest. Why no interest? Sir, whatever tax I have to pay, I have paid to the government. Now, I have paid my taxes after due date. Now I'll put this after due date this way. Let me draw a line to make you understand. Now, when I pay my tax after due date, entire tax paid with a delay. Sir, I have paid tax, whatever I have to pay, after 2 days, after 5 days, after a month, after 2 months. That's a concept called I paid the tax belatedly, but entire tax was paid. Short payment of tax. What is a short payment of tax? When I'm consolidating my sales data, I have noticed that there are 10 sale invoices. While compiling erroneously my Excel formula, 8 invoices were given, 2 invoices were left out for the formula. So I have filed my return, I have paid my tax, but there was a short payment of tax. 2 invoices which were to be considered for payment of tax, erroneously I have left out. Now that is called short payment of tax. So if I have paid my tax after the due date, if I have paid my tax short paid, both can be considered as my non-payment of tax. The moment there is non-payment of tax, then your interest provisions get triggered, right? So this is your second set which we need to understand with respect to your non-payment of tax. Let me come back to my presentation. Hope you are able to see my PDF, this presentation. Yeah. Now, this concept of payment of tax and interest computation, we will discuss in detail with more practical examples. Method of utilization of input tax credit. Now, this is one area where majority of your questions are set in your examination. Method of utilization. IGST utilized for CGST, SGST. CGST utilized for IGST or CGST. UTGST utilized for UTGST or IGST. A big confusion, sir. Don't worry, we will take an example. Then we will go with the concept of TDS and TCS under GST law. And finally, transfer of amounts in credit ledger from one ledger to another ledger. This is a new concept which has come in. I'll give you with practical examples when I come to that respective slides. So friends, this is what all in payment of tax, which we need to prepare from examination point of view. And for your attention, let me tell you, examination questions are set from this concept of payment of tax, a theory question from transfer of amount and utilization of tax. These two problem, this area a theory. Concept of 4 marks theory and 2 marks problem could be expected from these particular areas. Now let's jump to our main thing called payment of tax. Couple of important definitions. Input tax. When I say input tax, I refer your attention to section 41. When you have drawn the T account, I have said electronic credit ledger, amount credited to credit ledger on filing of return under section 41. So they say in relation to a registered person, your input tax means CGST, SGST, IGST or UTGST, which was charged on a supply of goods or services made to the registered person. And this includes IGST paid on imports, tax payable under 93 or 94. Now when I say tax payable under 9394, my input tax includes 9394. My input tax includes tax payable under reverse charge. Tax payable under 5354 IGST. When there is an interstate purchase where I have to pay IGST and RCM, that is your 5354. Union territory tax, again, tax payable under 9394 of respective state law or 7374 under UTGST law, but does not include tax paid under composition levy. So simple definition of ITC says any supply made to me, IGST, CGST, SGST, UTGST, that I have to include. Any tax payable under reverse charge, that also includes in my reverse charge. Output tax. In relation to a taxable person, this means the tax chargeable under this act on taxable supply of goods and services both made by him or by his agent, but excludes tax payable by him on RCM. That means to say, the law very clearly says, when you want to take the benefit of ITC, you can take the benefit for payment of tax on the supplies made by you, as a supplier. But this excludes tax payable on RCM. I cannot use ITC for payment of tax on RCM. So what I have to do? My RCM, I have to pay on cash using cash ledger and then take the credit. I repeat this point again. When I have to pay my tax, people who are not exposed to indirect taxation in the process of your internship, this is one important point. Whenever we say output tax, my output tax includes only that tax which I have collected as a sale from my customer to be paid to the government. My output tax does not include RCM, which I have to pay on reverse charge basis. Example, as a company, I have received services of an advocate. So when I have received the services of advocate, assuming the value of service is 1 lakh, and assuming I have to pay CGST, SGST 18%, 9,000. That 9,000, when I have to pay to the government, I have to pay using my electronic cash ledger. I cannot use electronic credit ledger, right? This is what we need to understand with the definition called output tax. And outward supply, we have discussed it when we are talking about books of accounts. This means into a relation to person, supply of goods and services are both where by way of a sale, transfer, barter, etc., which is to be recorded in my books of accounts. Now, payment of tax and interest. Now, they say whenever we refer to the term called payment of tax or payment of interest, wherever money has been deposited into my electronic cash ledger, wherever I deposit money into electronic cash ledger, that money deposited into electronic cash ledger, I can use it for payment of tax, interest, penalty, late fee, or any other amount. I repeat, the money which is put into cash ledger, it's like a hundi. That money in cash ledger, I can use it for tax, interest, penalty, late fee, or any other amount. This is how I use my cash ledger. In respect to credit, the money, the credit which is there in credit ledger, the input tax credit as self-assessed in the return of a registered person, that shall be credited to my credit ledger under 41. This is what we have discussed. Now, the amount in credit cash ledger we have discussed. This is a point with respect to my definition where they say the money which is there in your credit ledger, may be used for making payment towards output tax. When I say output tax, this does not include RCM. So whatever money is there in my credit ledger, I can use it for payment of output tax. How do I pay? We will take an example when I come to the respective slide and make you understand on that. Now, amount in cash ledger, I have clearly said use it for tax, interest, fee, penalty, or any other amount. No restriction. My amount in credit ledger, CGST or IGST, how do I use the amount in IGST? If you draw your credit ledger, electronic credit ledger, IGST, my credit of IGST can be used as a payment for IGST. Also, I can use it for CGST. Also, I can use it for SGST. People are familiar to play this cards. This we call a joker card. This credit of IGST is as good as my joker card, which can fit into any of the sets. So the credit available in my IGST, I can use it for IGST or CGST or SGST. The amount available in CGST, the credit ledger, I'm talking about the credit ledger, that CGST can be used for CGST, at best IGST. I repeat, the amount available in CGST can be used only for CGST. If any balance is left out, I can use for IGST, not for SGST. Similarly, the credit available in SGST, first I'll use it for SGST. In case if balance is there, I'll set off for IGST, not for central GST. Now, this is a restriction which is there in your section 49, read with 49A. So, lawmaker says the central GST cannot be used for state GST. State GST cannot be used for central GST. This is my restriction under the law. Now, this section 49 clearly says, I draw attention of you to this particular slide. My input tax credit on state law can be utilized only towards payment of integrated tax, only when the balance of input tax credit on account of central tax is not available. I repeat, the law says input tax credit on account of state tax can be utilized towards payment of IGST only when the balance in credit central GST is exhausted. I'll draw your attention to my Excel to make you understand very clear on this. Say my output during a month, IGST, CGST, SGST, and my input during the month. I'll put this input in the downward direction. Now, I have, say my IGST payable, 120, 50, 50. And my input tax available, IGST. Say I have IGST of 50 rupees, CGST of 100 rupees, SGST of 100 rupees. Now, for paying IGST, I'll use this credit of 50 rupees over here, right? Next, when I have to pay my IGST, see my liability is 120. I have paid 50 rupees here. Now, the lawmaker says, if you want to use this, like out of 120, 50 rupees already paid using IGST. I have to pay 70 rupees. Now, when I have to pay this 70 rupees, the question comes here, can I use my CGST? Can I use my SGST? Law says, don't use this particular SGST. Law says, don't use this particular SGST as long as you have your SGST balance available, CGST balance available. Now, for a moment, let me make this as 0, 0. For a moment, let us assume only IGST payable is there. CGST, SGST is 0. Law says, out of 120, 50 rupees I'll pay through IGST. So what will happen to the balance 70 rupees? Should I pay through cash ledger? Why to pay cash ledger? I have balance in my credit ledger. So question comes here, the balance 70 rupees, can I pay through SGST? This section 49 says clearly, you cannot use SGST unless the balance in CGST is available. So friends, here I have 50 rupees, which is available, 100 rupees available to pay the balance amount. So what I'll say my 70 rupees of CGST is used for IGST. Look at here. I am using my CGST of 70 rupees for payment of IGST. I'm using my CGST 70 rupees for payment of IGST. Sir, if I have why I'm using 70 out of 100, I'm using 70. Only if required, later I have to use SGST. Now, this is what the law says. Sir, how can we use this particular Sir, how can I use my SGST? I'll give scenario 2. In this case, assuming IGST 50 rupees is there, my CGST 50, input tax 50 rupees is there, right? Now, In this case, for payment of taxes, out of 120, 50 rupees I'll set off, balance 70 rupees I have to pay. So what I'll do here, my CGST balance, I'll use 50 rupees. Only when I have exhausted my entire CGST, then I'll come to SGST. 50, 50, 100 rupees I've paid, I'll use my 20 rupees from SGST. This is what my section 49 talks about, utilization of SGST or Union Territory Tax only when the balance available in your central GST has been exhausted. Examination, I repeat to your attention, out of 4 marks, out of 6 marks, one small adjustment will be there for an SSC in respect to utilization of SGST. Looks very small concept, but important from your examination point of view. Next. Balance available in cash ledger. We have drawn the T account of cash ledger. Sir, I have deposited money into cash ledger. I have debited that cash ledger for payment of taxes. The provision says, section 49 says, look, you have money available in cash ledger. Erroneously, while putting the money into cash ledger, instead of putting 100 rupees, I have entered 1 0 extra, 1000 was deposited into cash ledger. What will I do with that? The money which is there in cash ledger, if not in a position to utilize, I can claim that back as a refund. Section 54. There's again separate provision with refund. I'll explain in detail with respect to this money. Under 49, they say, any money deposited erroneously, any money deposited excess into credit electronic cash ledger, I can take it back from my electronic cash ledger. Again, attention of those people who have less exposure to indirect tax laws, especially GST in your internship. This provision says, look, wherever there is a liability ledger for a person registered under 51 for TDS, a person registered under 52 for TCS, person registered under section 10 for composition. I repeat. Yes, Jay. Okay. Video is on, Jay. Is the video available now? Okay. I have put on my video, Jay. I'm not sure, Jay, but I'm getting this alert that video is on. Yes, yes, yes. Is that available, Jay? Yeah. Okay. Friends, to continue back with our discussion. Please keep in mind, people who are exposed to indirect taxation for the first time, there's a concept of TDS, income tax TDS, GST also tax deducted at source. If you're a person registered for TDS, if you're a person registered for TCS, I repeat, if you're a person registered for TDS, if you're a person registered for TCS, then also a person registered under composition, all these three people, any liability which is created in the liability ledger, that liability should be paid through cash ledger. I repeat, any tax to be paid under section 51, section 52, section 10, TDS, TCS, composition. All these three should be paid using my cash ledger. I cannot use my credit ledger. So what if I have used erroneously? Then it is not as per the law. Then any amount of demand which is debited in liability ledger, it gets reduced if there is an appeal mechanism. Now, we were talking about the penal provisions of e-way bill. The officer has intercepted the vehicle, e-way bill is not there, he has demanded for a penalty. That gentleman, that officer has created a liability in my electronic ledger, liability ledger. Assuming I prove to the officer that, sir, I have prepared my e-way bill, I have failed to produce you when you have asked. That officer, when I go for appeal mechanism, after I get an order passed in appeal mechanism, to the extent the order is in my favor, that gets credited automatically. It means my liability gets reduced to the extent of order passed in my favor. Next, order of payment of taxes. Friends, this is one very, very important provision, section 49, which I draw your attention. Most of you, when you are doing your internship, when you are doing your internal audit or SA statutory audit, you would have noticed that how should I pay my taxes? I'll give a question for you to understand this. Let me go back to my Excel file. Hope you are able to see my Excel file. Say, I have my tax period where I also have, say, my output tax and my input tax. I'll not put the head, I'll not put the separate head. I'll just club all input tax, output tax for convenience purpose, only for discussion purpose. Say, my tax period, April 2020, May 2020, June 2020, July 2020. My output tax is 120, 150, say 180, 300. My input tax is 50, 80, 90, and 120. Now, my net tax payable, what I will do, whatever output tax is there, from there, I'll reduce my input tax and I'll say this is the amount payable in cash. Right? This is how we do the calculation. This is how we need to do calculation of my taxes. Sir, assuming in August 20, I have realized that my output tax for August 20 is 100. My input tax for August 20 is, say, 125. Right? In August 20, I have realized that in the month of April, I have taken my input tax credit erroneously. ITC taken rupees 10 excess. Instead of 40, I have taken 50. Now, can this 10 rupees be paid in the month of August 20? I repeat my question. In the month of April 20, I have paid 50 rupees as my money. I have offsetted 50 rupees as my input tax credit. That 50 rupees, when I have been reviewing in August 20, I have noticed that instead of taking 40, I have taken 50. Like 10 rupees I have taken excess. That 10 rupees excess I have noticed in the month of August. If you notice my month of August, my ITS is 125. My output tax is 100. So can I pay my output tax 100 plus 10 rupees pertaining to April? 110 rupees can I pay? This is the question which comes to your mind. Working capital management, your fund flow management, payment of taxes, tax planning. There are multiple things which I would attribute, and I'll take back your attention to the presentation. Now, the presentation, the section 49, subsection 8 says this. Look, you as a taxable person, when you're paying your taxes, please follow the order. What it says, self-assessed tax and other dues relating to returns of previous tax period. They say, in the current month when I'm paying my tax, self-assessed tax and other dues which are pertain to the previous tax period. Self-assessed tax and other dues which are pertain to current month. Then any other amount payable under this act, including the demand determined under 7374. That means to say, the amount which is there in my credit ledger, amount which is there in my cash ledger, absolutely not to worry. Credit ledger, when you're using your credit ledger, the provision says you can very well pay self-assessed tax pertaining to the previous tax period. I can pay self-assessed tax pertaining to the current tax period. I can also pay any amount payable which is determined under 7374. 7374 is a notice, show cause notice. Any government officer has given a notice after a period of 1 year, 2 years. I can pay that tax pertaining to the previous 1 year, pertaining to the previous 2 years, current month, using my existing credit balance. This is one important aspect many of you have to read and understand carefully. Then deeming fiction. Now, this is one provision which is linked with your GST refund law. Benefit of input tax credit. Every person who has paid tax on goods. Now, it says paid tax means whatever tax I have collected, whatever tax invoice I have issued, or whatever amount I have presumed that it is my tax and I have paid to the government. Now, when I'll pay tax, advances received, I pay tax to the government. Bill raised, I paid taxes to the government. RCM, I paid taxes to the government. That tax shall compulsory. Unless the contrary is proved, unless you prove, it shall be deemed. There is a deeming provision. What is that deemed? It is deemed that you have passed on the full incidence, the burden of such tax to the recipient of goods or services. Lawmaker says, whenever you have paid the tax, the lawmaker is deeming that this burden of tax is not on you as a registered person, you have passed on to the third party. Unless you prove, the lawmaker says, you have to prove. Sir, why should I prove? When I file my refund application, lawmaker says, look, why should I give you a refund? If you have been deprived, you have been suffering, then let me pay back to you. No, you're not suffered. Your customer has suffered. I'll pay to that gentleman, not to you. So this deeming fiction, section 49 says, unless you prove that, it is presumed that the incidence of burden, the tax is passed on to your customer. This is what law says. Friends, this is one new amendment which has come in 2020 as PMT 09. I draw attention of you, section 4910, which is a very, very important amendment. A 2 marks adjustment you can expect from this particular amendment. Now, I'll give you the background for you to understand, then I'll explain this provision. See, in a particular month, there is an assessee who has got a annual turnover of say 1 crore or say 2 crores. This particular small time assessee for a particular month, he has to pay his output tax. Output tax of 20 lakhs, 10 lakhs CGST, 10 lakhs SGST. While preparing the challan, by oversight, 10 lakhs amount was put into IGST instead of CGST. He has deposited the amount. Now, when he is going for filing his return says, look, you have to pay 10 lakhs of CGST. There is a zero balance. Now, it is very burden for that assessee again to get the sum of 10 lakhs, put into proper head called CGST, claim a refund of that 10 lakhs from IGST. Now, whatever I'm talking, if it looks like Greek and Latin, for the people who are not exposed to GST law, I would draw your attention to this slide. This particular slide, let me take you through my annotation. Whenever I have to deposit a tax, first I need to choose IGST, CGST, SGST or 6, says a proper head. Sir, I did a mistake. When I have chosen a head, then money while depositing, I have to put into various heads. Tax, interest, penalty, late fee or others. Now these are the various minor heads which are there under the challan. Human error. Any human error while selecting, I have selected IGST instead of CGST. And while putting the amount into tax, I put the amount into interest column. So this is where my law says you have to pay the tax and claim a refund of wrong remittance. This was there till the amendment made in 2020. Now this amendment, there's a form called PMT09. There's a form called PMT09. What it says, look, there's a head called major head. Under this major head, you can freely transfer any amount from any of these minor heads. So by mistake, I have deposited amount under IGST tax column, but actually I have to deposit under CGST tax column. I have to deposit my money under CGST column, but erroneously I have deposited under IGST. Law says don't worry, you can put it back money from IGST to CGST. This is a mechanism called transfer of amount in a cash ledger. So as a registered person, as an assessee, if I have deposited my tax erroneously from one minor head, I can put into respective major head. Minor head, there are 1, 2, 3, 4, 5 minor heads. Major heads, 3 taxes, 1 cess. So from any of these minor heads, I can put it back to the major heads. Now this is the concept which was brought in. When I transfer from minor head to the respective other minor heads under major heads, law says it's a deeming fiction. I deem that you have sought a refund and you have deposited tax into the respective heads. Now this is a GST provision which was brought in to ease out your clerical errors, manual errors, a big relief under GST law. Moving on, utilization of input tax credit. Input credit on account of CGST, SGST or UTGST. My input, first you have to exhaust your IGST. The law says input tax credit on account of CGST, SGST or UTGST shall be utilized towards payment of either IGST, CGST, SGST or UTGST as the case may be, only when the benefit of IGST has been first exhausted. And my benefit of input tax credit, first I have to utilize only for payment of IGST. If there is any amount left out, that can be used to payment of any other tax in any other order. To make you understand, I'll draw your attention to Excel file. Hope you're able to see my Excel file. I'll take the headings once again here. I'll take my output. I'll take my input. I call this as order of payment of taxes. My rule 88A. Scenario 1. My output tax is 120, say 50, 50. Let me take out this color coding so that easy for us to understand. Okay. Now, say in a particular month, I have my output tax 120, 50 CGST, 50 SGST. And my input tax of IGST is 200. My input tax of CGST is 20. My input tax of SGST is 20. Law says first utilize IGST. So I call this is step 1. Step 1, use your IGST. So what I'll do, I'll try to exhaust my IGST. I'll use IGST to the payment of my output tax of 120. Then out of 200, I've used 120. I've been left with a further balance of 80 rupees. Law says use that IGST to the extent of 20 to pay your CGST, 50. My output tax of 50. Now, out of 200, when I have used this money 50, I've been left with 30. I can pay the balance 30 for SGST. Now, question comes, sir, why 50 here? Why not 50 here? This is what we need to understand. Law says you're flexible. I can use like out of 200, when I use 120, 80 is left out. I can use 40 rupees over here. I can use 40 rupees over here. Absolutely, you're free to do so. This is what the law says. So when I have IGST, first I need to exhaust IGST. Then only I have to go for payment of my CGST, SGST. So after paying 50 rupees, I have to pay balance 10 rupees. So what I will do, I'll use CGST of 10 rupees and I'll use my balance SGST of 10 rupees over here. This is what law says. This is my scenario 1. I'll take scenario 2. Say input output tax 120, 50, 50. Let it be as it is. Assuming my input tax credit is 100 rupees for IGST, 80 rupees for CGST, 80 rupees for SGST, right? So law says first I have to exhaust my IGST. So out of 120, I'll use entire 100 over here. Now once I've used 100, I have to pay balance amount of 20 rupees. So when I'm using my CGST, so the law says use your CGST. First I have exhausted IGST. So CGST 80 rupees, I'll use my 50 rupees. I'll use my 50 rupees for payment of CGST. Then balance amount of 20 rupees I'll use for IGST. And here SGST, I'll use 50 rupees for payment of my SGST. So friends, this is how I use my input tax credit for the purpose of payment of taxes. So I'll draw attention back to my slide. Order of utilization. First, exhaust your IGST. Once IGST is exhausted, balance in IGST. You are free. It doesn't say use only for CGST, use only for SGST. The remaining amount, if any, may be utilized. I can use 50%, 50% for CGST, SGST, or UTGST. This is what Rule 88 talks about. My input tax on account of central GST or state GST should be utilized towards payment of IGST, central GST, or UTGST as may be, only after input tax credit on account of IGST has been fully utilized. We have discussed that portion. Next, Rule 86, which talks about your credit ledger. Now, I draw your attention to the T account, which I have explained few minutes back. Visualize your T account, credit side, debit side. My electronic credit ledger, I repeat, my electronic credit ledger. For examination, please understand, this is one slide which is very helpful. In a matter of 2 minutes, you can read entire that Rule 86. Rule 86 has got more or less 8 sub-rules. All that has been summarized in this particular form. So my electronic credit ledger shall be credited when I claim my ITC. As per section 41, whenever I file my return, my electronic credit ledger gets credited by the input tax voluntarily, suo moto, self-assessment basis, provisionally, what I have determined. That's the first credit entry. So let me put tick for each and everything what we are discussing. First and foremost, my credit ledger is credited by when I file my return. This is my first aspect. Next, when I file my return, my credit ledger gets debited. My credit ledger gets debited to the extent of tax I have to pay, which is disclosed in my return. Credit what ITC I have claimed. Debit what tax I have to pay using my return. Then I can also file a refund application. If you recollect, sir, I have accumulated input tax credit. When we talk about my refund chapter, you'll have more clarity with respect to this particular topic of debit and credit in my electronic credit ledger. I use a term called accumulated credit balance, accumulated tax. So if at all, there is an accumulation in my input tax credit, accumulation in my credit ledger. Why? One is inverted duty structure. Second is my zero rated supply. Any of these two reasons, I want to claim a refund, section 54, I'll file a refund application. The moment I file my refund application, a debit entry gets posted in my credit ledger. Why? Government wants to give you back in cash, right? That money, what is there in your electronic ledger, government wants to give you a refund. That point in time, it gets debited. For some reason, the government officer wants to reject your application. The moment he rejects, whatever was debited as a refund gets credited back to my electronic credit ledger. This is the next aspect. Next, refund of erroneous or excess payment of tax. Now, law says by mistake of law, I have paid tax. Instead of paying 100, I have paid 10,000. I have paid 1,000. That if I have paid through credit ledger, it comes back to my credit ledger. Unless that burden of proof is established, that money will not come back to my credit ledger. So friends, these are the modes where a credit entry happens in credit ledger, a debit entry happens in my electronic credit ledger. This is a summation of my credit ledger. Next. Conditions for using credit ledger. Now, this is one recent amendment where I'll give you a detailed background for you to understand. Commissioner or any officer who's having a rank of assistant commissioner, please understand carefully, not from examination point of view, from the regular knowledge of GST law. When you read these newspapers on fraud which has been unearthed by the tax offices, etc., this is one rule which is brought in the previous budget, a very powerful amendment. Now, a commissioner or an officer not below the rank of assistant commissioner, these officers will put a bar on your electronic credit ledger, like your bank account, attachment of bank account. The moment the tax officer attaches your bank account, you're not supposed to do any transactions. Money can, whatever money comes in, that remains in the bank account. It's like a escrow account. You cannot touch that. Similarly, my credit ledger, government says, look, I'm going to stop your debit from credit ledger when the credit of ITC, which was taken on the basis of a tax invoice or a debit note, which was issued by a registered person, and that fellow is found to be non-existent or not conducting business, fake invoices. I have a supplier, say from Gujarat, that supplier raised a tax invoice on me. I have taken an invoice, input tax credit. When there was an audit assessment being done, the officer noticed that this fellow who raised an invoice on me is from Gujarat. When there was some review, some verification, background review was done, they noticed that this gentleman was not even existence, but it was a fake entity, fictitious entity, or business itself was not there. I'll give another example. Say, there is a construction activity happening of a highway. There's one builder who's undertaken that highway construction. You know that for construction of an highway, be very practical when you're doing this audit or assisting an assessee. Know your customer. This is one norm especially after this due diligence and the code of ethics have been more stringent, we need to know all these aspects when we certify or when we issue a certificate. There are certificates drawn by an assessee saying that they'll come to a chartered accountant. Sir, my supplier or my principal wants to get a certificate from CA saying that for this project, these are the procurements done. Why? They want to ensure the accountability or genuineness of this project. When I want to draw money from my government, when I want to draw from the agency who have assigned the contract, they want to get a certificate from CA. These are all the purchases done for that particular project. Say, when you're looking into purchases, there is a steel purchase for 100 tons. Now we need to be doing due diligence. What is a project? This project, you purchased 100 ton steel. This is construction of a highway, which is for a stretch of 5 kilometers. For a stretch of 5 kilometers, on an average, you prepared a budget where you say 40 tons of steel is required, but you procured 100 tons of steel. Where is that 60 ton? It's a fictitious, bogus, or it is a illusionary purchase. Now, that is what the lawmaker says. I'm going to put a hold on your electronic credit ledger, where I see you have procured a material from a person who didn't even do business. You have procured from a person who doesn't exist at all. Or you have taken a credit without receipt of that goods or services. To the extent of that 40 tons, you didn't had procured. Without procuring that 40 tons, why will I give a credit for you? Or the credit of input tax, which has been taken, or a debit note on which you have taken an input tax credit, that particular tax was not paid to government at all. I'll give another example. There's something called bill trading, rotation of bills. When you read all these fake cases which are coming into the newspaper, you'll get more of knowledge how this accounting entries, how these adjustments, how this siphoning of money is happening. Now, this clause B says there is party A, party B, party C. A bills to B, B bills to C. Now, in between, B is a fictitious party who is created for the purpose of bank funding. Now, A sells the material to B. B was illusionarily brought into the in between to the loop, where B says, look, this is a business I'm doing. Based on the bill raised on C, he gets the bill discounting. He gets the bill discounting. He also gets the bill discounted. Money is floated twice for one transaction. Now, this is a clause where they say there was a tax charge which was not paid to the government. Somewhere there was a siphoning of money. Somewhere there was a play around with the tax laws. Now, the government, when they feel that whatever tax invoice was there, where you have taken ITC, that ITC was not paid to the government by the supplier, huge amount, then they want to hold the credit on debit ledger. And the registered person who is availing ITC, who has not been found into existence. Now, B, as I say, is a fictitious entity. B doesn't even exist. A and C have artificially created B. Even then, the credit ledger of B will be blocked. Now, these are the circumstances where the credit ledger is blocked under 86A. Now, this commissioner, if there is a genuine reason, etc., or any money, they will give an opportunity of being heard before putting a halt on your debit. Any genuine reason is there, that will be vacated. And as per the law, within a period of 1 year of that blocking, automatically that blockage gets vacated. That's what they say. Next, we move on to electronic cash ledger, which is under Rule 87. Again, go back to your T account, which I have explained you earlier. Visualize your T account. Please visualize your T account. T account. Credit side, debit side. The form of this electronic cash ledger is called PMT05. Now, when we talk about this PMT05, there is a credit entry, debit entry. Where is a credit entry? When someone deposits money into the registered person's cash ledger, there is a credit entry. I, being a registered taxpayer, I can deposit that money into my account, or someone else on my behalf using my registration number, they can deposit that money. So there is a credit entry into my credit ledger when there is a money deposited. This money which is deposited gets debited when I have to pay my taxes. So friends, when I deposit that money, I use that money also for payment of my taxes, payment of tax, interest, penalty, whatever you call that. Next, sir, I noticed that minor to major transfer. Wrongly, I have transferred over this account. So when I want to transfer using PMT09, there will be a debit entry. Automatically, there will be a corresponding credit entry. We call that as a contra entry. In bank, we have this contra entry, money deposited from one bank to another bank. So this contra entry, the moment you use a PMT09, there is a debit entry in cash ledger. There is also corresponding mirror credit entry in my cash ledger. This is called my electronic cash ledger. Summation of all what we need to understand from my electronic cash ledger. Section 50, interest on delayed payment of tax. The hardcore, most tested provision under your examination. We see that there is a lot of weightage for this interest calculation, and also sense of presence of mind required. How do we calculate payment of taxes? Also be calculated when there is an interest to be paid under this section. Let us read through and we will discuss in detail by way of an example on this. Interest under section 50. Every person who is liable to pay tax, every person, look at the language they use. Every person who is liable to pay tax in accordance with the provisions of this act. When they say a person who is liable to pay tax because there is a supply, I have issued a tax invoice. Liable to pay tax because there is an advance received. The moment I receive advance, I have to issue something called receipt voucher. On receipt voucher, I have to pay tax. On receipt of notified list of goods and services, again I have to pay my tax. Please understand, when I say payment of tax on account of supply, payment of tax on account of deemed supply under section 13, advances or reverse charge mechanism, right? In accordance with the provisions of this act. When I say reference to provisions of this act, please make a note in your working note. People are very good in indirect taxation. You want to become expertise. Provisions of this act. Section 12, section 13, section 31, section 34. Section 16, I repeat, section 12, 13, 16, 31, 34. These are all the preliminary sections where the payment of taxes is triggered. Now, any of these provisions, when there is a liability on me to pay the tax, but look, they have casted a liability, but there is a failure to pay the tax. Failure to pay the tax or any part thereof. Now, what is this? If you recollect, I gave an example. Sir, I have to pay 100 rupees. I have paid 100 rupees. That is called fails to pay tax. I have to pay 100 rupees. Erroneously, I paid only 80, 20, any part thereof. I have failed to pay. Now, it could be intentional. It could be unintentional. So, if there is a failure to pay tax or any part thereof to the government, when within the prescribed period, I have to pay my tax within the due date, but I have failed to pay. Then assessee shall, that registered person shall is a compulsion. For the period for which the tax or any part thereof remains unpaid. Now I have to pay the tax within the due date. I have failed to pay. Now this is an example. So my due date is on 20th. I filed my return on 18th. After filing my return, I noticed that I have short paid the tax. Can I pay on 18th that balance amount? Very well. The moment you paid your tax before the due date of 20th, it's deemed that you have paid that differential tax. Any money unpaid within the prescribed period, then this penal provisions come in. Pay on his own motion. Pay on his own interest at such rate not exceeding 18%. So the law says, please pay your interest at the rate which is prescribed. So why are you taking so much time for a simple interest calculation? There's a reason for you to make you understand how this interest provisions are triggered. And when I go to the actual essence, you will get a confusion. Go with the flow. Though you know the law, please go with the flow for you to understand this calculation. So in simple, there is a liability on me to pay the tax. I have not paid the tax, either 100% or part thereof. When should I pay? Within the given time. If I have not paid within the given time, for that portion which was not paid, I have to pay my interest. This is what section 50 talks about. Now, let me go further. Provision to this section 50. It says, look, I have asked you to pay interest. Now, when I'm asking you to pay interest, this is a crux where your entire argument of interest comes into picture. Please pay attention to this slide. Provision, this says, provided that interest on tax payable. Look, earlier slide we said there is a tax payable but not paid. The interest on tax payable in respect of supplies, interest on tax payable on those supplies which are made during a tax period, and declared in the return for the said period, which is furnished after the due date. Look, I am filing my return. I have disclosed the tax what is to be payable, and I have been furnishing after due date. They say for a particular tax period, 20th is the due date. So I have declared my tax of 100 rupees in that return. But instead of filing return on 20th, assuming I'm filing on 25th, this line, I have to file my return on 20th. In the return, I have to show my tax liability of 100 rupees. I've shown 100 rupees. And that return, instead of filing on 20th, I'm filing on 25th. In accordance with the provisions of Section 39. Section 39 refers to your GSTR 3B as of today. So it says, when you file your return after the due date, where such return is furnished after commencement of except where such return is furnished after proceedings under 73-74, what they say, interest shall be levied. Now this portion, friends, I'll come to later. Please ignore this out of your mind. Till now, you have to understand, I have to file a return for a tax period. My return for a tax period, due date is 20th. Sir, instead of 20th, I'm filing on 25th after 5 days. So when I'm filing my return on 25th, the interest shall be levied on that portion, the tax that is paid by debiting electronic cash ledger. Let me come back to my Excel file to make you more clear on this particular provision. I'll come to my Excel file. Hope you are able to see my Excel file. Electronic. Okay, I'll put tax period, due date, date of filing, then my output tax, my input tax, net tax payable. Friends, I'm just taking under one head for ease of discussion. I'm not putting into IGST, CGST, SGST. I'm just putting into one head for better understanding. For the month of say October 20, my due date is say 20th November 20. My due date is 20th November 20. My date of filing is 25th November 20. My due date is 20th. I have filed on 25th. Say my output tax is 100 rupees. My input tax is 60 rupees. My net tax payable is 40 rupees. Now this net tax payable, I'll pay through electronic cash ledger. Now, is interest payable? Is interest payable under section 50? So the answer to this question, we need to analyze. Is there a tax liability? Is there a tax payable? Answer is yes. Have you paid the tax? Answer is yes, I have paid. Have you paid within the due date prescribed? Answer is no. Sir, I have to pay tax. I have paid the tax, but not within the due date prescribed. Then for the delay, what is the delay? My delay in payment of tax is 5 days. Sir, 5 days I have delayed. So for 5 days you pay interest. My section 50 provision says, look, you have filed your return belatedly, right? Because you have filed your return belatedly, when you pay interest under section 50, pay the interest on tax paid through cash ledger. That is on rupees 40 alone. I repeat, when you're paying your interest, pay that interest on the tax portion, which is paid using debiting my electronic cash ledger. So what is the reason? Why is the concept you have to pay 100 rupees? Instead of paying on 20th, you're paying on 25th. Why you're asking interest only on 40 rupees, not on 100 rupees? The answer here is the logic. Sir, I have a input tax credit of 60. My working capital issues, I'm not having enough funds, but I have a credit earned for 60 rupees. So from where you got that 60? That 60 is from a supplier. The supplier who supplied the goods and services to me, that gentleman has paid the taxes duly to government. Because the tax was paid duly to government, to the extent of that input tax credit, government cannot redemand interest on that. So what is that I have to do? I have to pay on 40. This is what my section 50 talks about. This is where interest payable only on the cash ledger portion. Now, this is scenario 1. I draw attention of scenario 2. Now here, tax duly disclosed in the written. Now, I take the same heading, same example for our understanding as scenario 2. Let me change this as scenario 2. Tax not duly disclosed in the written. In the month of October, let me just put the figures. 20th November, I have to file my return. Assuming I have filed my return on 20th November, my output tax is 100, my input tax is 60, or say my input tax is 120. Now, in the month of November, there is a discovery or there is an identification that for say June 20, for the month of June 20, there is an output tax payable to the extent of 10 rupees, but erroneously missed out to pay. So can I pay that 10 rupees in the month of November? Answer is a big yes. So can I use my input tax credit for payment of such tax? Refer the order of utilization, self-assessed tax for the earlier period, self-assessed tax for the current period, tax determined by the officer under 73-74. So because of that order, input tax earned in the month of November can very well be used for payment of this June 20, which was missed out. So I draw to attention, this 10 rupees I can pay. Sir, I'm paying that now my total output tax is 100. So I'll debit my input tax for 110 and my net tax payable in cash is 0. So when I'm paying 110, should I pay interest on this 10 rupees? Now answer is a big yes. Interest under section 10. I have to pay interest under section 10 on 10 rupees. Why? This is not a case of filing of a return where disclosed of tax is there. This is a case of a filing of a return where tax to be disclosed but not disclosed. Because you have erroneously not paid the tax, that tax you have to pay now. So can I claim the benefit under section 50? Answer is a big no. I can claim a benefit under section 50 only when my tax due in a particular month has been properly disclosed in that particular month return and has been filed belatedly. So this is a provision of section 50 which is going to be tested in your examination. The logic for this reason, look, it could be a violation, intentional or unintentional. Government feels that, look, you have not paid your taxes, so I'm going to levy a penal interest on that portion, what you have to pay but not pay. That is what they are going to demand from you as a assessee. Next. There's one question called, can we claim from Sashank, can we claim input tax on tax payable under reverse charge? Yes, Sashank. I can claim input tax on the tax which has been paid on reverse charge. And this is also forming part of my definition. There's a question from Abhi. I'll answer your question at the end of the session, Abhi. Now, this is my section 50. This section 42, section 43, which is a matching concept. Like the moment you file your GSTR 1, there is a GSTR 2, there is a GSTR 3, matching 1 to 1. This concept was not brought into GST law, because of which section 42, 43, interest under section 50, this has been kept under abeyance. Let us not discuss that because of paucity of time. Now, We move on to the next topic of today, payment of tax deducted source under section 51. I'll give you a background of this section 51, why they have brought in and how this is helpful. See, a lot of theories there. You look from your concept point of view, examination point of view, which is very important. People who have exposure in this area, people who are coming for the first time for IDT, please look it from the concept and the intent of the lawmaker. It is easy for you to present in your examination. Now, this concept of TDS, like your income tax, precisely this provision was brought to the government entities. As of today, the government has identified central government, state government, department or establishments, a local authority or a government agency or set of notified people. Whenever there is a supply made to these government agencies, the government of India said, you recover something called TDS on what? Either on the payments or on the amount credited to that supplier. Should I do for all? No. Only for those taxable goods or taxable services which are given by a supplier who is registered under GST law, and the value of that contract exceeds a sum of rupees 2,50,000. Exceeds a sum of rupees 2,50,000. Now, for this computation of 2,50,000, the value of SGST, CGST, IGST, etc. shall be excluded. I'll come back to the previous slide. Now, the law says there is a lot of gray area. Most of these government contracts are in the hands of a civil worker, hands of a supplier, who are all regular defaulters. Why they say regular defaulter? Since government doesn't take the credit of input tax credit, the supplier, even if he doesn't file GSTR1, most of these government offices doesn't have GST number. So there is a possibility to play around, but the supply is made to the government agencies. Government felt, let me plug the loophole. The moment I start recovering, I create a database of those suppliers. I get to know how much is the value of supplies. Let me check their cross-verify those returns, whether they have declared those supplies in their returns and have they paid the taxes to the government. Hats of provision, which was brought in the GST law. So this, as of now, it says under GST, section 51 governs this provision. State, central, government, departments or establishments. So they don't have PAN, they don't have GST number. They need to register under GST law. They'll be allotted with a tax deduction account number, a number which is used for the purpose of deduction of tax. That particular number will be used by these government agencies to recover TDS. So for which supplies? For those supplies made by a registered tax person, for those supplies made by a registered taxable person who is called as a deductor and deductee, the value of those taxable goods or services under a contract. So every contract, if the value of the contract is exceeding 2.5 lakhs, TDS provisions get attracted. Sir, I have a contract for supply of manpower. I have a contract for supply of this passenger vehicle transportation service. I also have a contract for supply of drinking water. When I have multiple contracts, how does the TDS provisions do get attracted? For every supply under the government offices, there is a separate contract. They never mix up. Supply of tea, coffee, one contract. Supply of food, one contract. Supply of manpower, hired manpower, one contract. Cleaning premises, plumbing job, every job, there is a separate contract. So when you assign a contract, under that contract, if the value is exceeding 2.5 lakh, then TDS provisions do trigger. So what is the threshold limit for that 2.5 lakh? This excludes my CGST, SGST, IGST. So what is that TDS? When is that TDS not required? When there is a supply of these goods or services from one public sector undertaking to another public sector, no TDS. Or any of those 4 boxes I have shown you, if any of those agencies making service supplies to another agency, no TDS. So this exception of TDS, supply of goods and services from one public sector to another public sector. Hindustan Aeronautics Limited making a supply to NALCO, no need to recover TDS. One public sector to another public sector. Supply of services from one, police commissionerate. The Maharashtra police government giving a interrogative support services to the state of, say, Bihar. Now, though it is not taxable, they say this doesn't call for applicability of provisions of TDS under section 51. Under section 51, This TDS is not recovered. TDS is not applicable where location of the supplier and place of supply is in a state which is different from the person who is directing TDS. I'll draw attention to this table for making you to understand. Very simple concept, very simple concept. It says, if the location of supplier and place of supply, I repeat, location of supplier and place of supply, these two happen in a state which is other than the person who is recovering TDS. I'll give a simple example. Say there is a service provider called Taj Hotels. This service provider of Taj Hotels gives a service called accommodation services to an employee of a government undertaking. I'll give an example. Government of India, they have something called 5-year project. Every time, whenever there is a budget presented, most of these government undertakings, they give a proposal to the Government of India for allocating of funds. Example, DRDO, ISRO. ISRO says for the next year, for the next 3 years, we have a fund requirement of 1,500 crores. Now, from ISRO, representative from Andhra could be the director, project director, travels to Delhi, stays in a hotel, and then they will come back. Now, there is a contract for providing a hotel accommodation for their employees. The Taj Hotel, assuming they provide services of rental accommodation, service provider Taj is in the state of Delhi. Accommodation is also in the state of Delhi. My place of supply is in Delhi. My service provider is in Delhi. When they charge this SGST, CGST and a contract of accommodation service, this ISRO, government undertaking in the state of Andhra Pradesh, should not recover any TDS because the place of supply is in Delhi, service provider is in Delhi, no need to apply the provisions of my TDS. This is what we need to understand. And what is the rate of TDS under GST law? There is a TDS applicable at the rate of 2%. There is a TDS applicable at the rate of 2%. Now, there is any person who is recovering TDS, they should pay the TDS to the government within 10 days of subsequent month. And this money recovered is communicated to the deductee using this form called GSTR 7A. So what if there is a delay? If there is a delay in giving that certificate, there is a penalty of 100 rupees per day up to a maximum of 5,000 rupees. Now, this is just a procedural provision. Now, this TDS, whatever money was deducted, that should be paid to the government using electronic cash ledger. And that money comes to the deductee, like example of say Taj, if Taj is also in Andhra Pradesh, and some reason, like they do services in Andhra Pradesh, if TDS is deducted, that comes to the electronic cash ledger of Taj. Next, TCS. Now, this is one area I see most possibility to test one example for 2 marks. Let us understand this concept of e-commerce operator, e-commerce. Then we'll go to the concept of TCS. Again, a big game changer under GST law. E-commerce means supply of goods or services through digital products over digital electronic network. I want to buy Samsung TV. Instead of me going to the local dealer, I go to Flipkart, I go to Amazon, I see what is the price, I'll compare, do a lot of R&D, and then I place an order. That's called e-commerce. E-commerce operator means a person who owns, operates, and manages a digital or electronic facility for e-commerce. Now, this is the e-commerce where the example of Flipkart, the products are sold using Amazon platform, money is collected by Amazon, and the supply of taxable goods and services is done by a other fellow. This concept of TCS says, look, whenever there is a supply of goods, whenever there is a supply of services, which one? Taxable. This TCS refers to a concept, whenever there is a supply of taxable goods or services through e-commerce operator. Who is an e-commerce operator? Means this is a supplier through which portal, that e-commerce portal, there is a supply happening, and for that supply, the payment, the money is collected by this e-commerce operator, like Amazon. When I purchase a television on Amazon, there is a supplier, say in Noida, I stay in Uttar Pradesh. From Noida, the TV is picked up from by Amazon agent. It comes to Uttar Pradesh, and at my home, the delivery happens. When I make a remittance of say 50,000 for that television, that money is collected by Amazon. In turn, it gets credited back to the seller over a period of time. So this concept is called e-commerce operator. So whenever there is an e-commerce operator shall deduct a sum of rupees 1% on the net value from the supplies happened through that e-commerce operator. I'll give an example. So I am a small-time business fellow. I do some household products which are called kitchen cutlery. This kitchen cutlery has got some speciality, which has got hand painting, which long lasts, and also it's a very not available at any stores. So if I do that supply through e-commerce e-commerce website, law says during a particular tax period, what is the total value of supplies made? Net value. Net value means sales made by me, returns paid my customer on my behalf. If I have sold goods worth 10,000 and also there is a returns to the extent of say 2,000, 10,000 minus 2,000, 8,000. That is called net value. On that net value, 1% is a TCS deducted. If it is SGST, CGST, interest rate, 0.5%, 0.5%. If it is an interstate supply, then 1% is a TCS which is recovered. This money which is recovered as an e-commerce operator to the extent of that 1% should be paid to the government account within a period of 10 days. And also, after furnishing, I have to give a certificate to the deductee saying that this is the money which I have deducted after depositing that money. And this e-commerce operator has to file monthly return stating that these are the supplies made by that particular taxable person during that particular taxable period. And also annual return to be filed in this particular regard. This is the concept called TCS, which is there under your GST law. Before we go further, let me see if there are any couple of questions in this regard, what we have discussed. I can see that many of the students are putting questions with respect to this videos which are not available, the lectures which are not available. Students, please don't panic. Board of Studies has taken on record this particular technical issue. Some reason this has not been made available. Within a week's time, they are going to work back and put back these particular videos. They also are working this. Many students are raising their apprehension that we are missing. Today being the last, like tomorrow is the last date filing of GST annual returns. I can see that many of the students across India, they're not having time to attend to many of these sessions. And you want to listen to these sessions at a leisure point in time. This wing has been working. There's some technical issue and they are going to come back, restore your old videos and this video also. So absolutely don't worry to panic. They're going to resume back on this particular aspects. There's one question with respect to this TCS. So can this TCS be applicable in case of interstate supply from a registered party? Okay. See, this concept of TCS was brought in. Let me put an example for you to have a better understanding. Now, say there is an e-commerce operator, there is a supplier, and there is a buyer. E-commerce operator, I'll put an example called Amazon. Supplier, registered party. Buyer, unregistered. Supplier is Amazon. Supplier is unregistered. Buyer is registered. Amazon, both are unregistered. Now, this is what one question asked by one of your friend. Let me put across to you. As per your section 24, which deals with your compulsory registration. Any supplies, any taxable supply of goods or services, irrespective of the threshold limit, please keep in mind there is a compulsory registration to be done. So there is a compulsory registration applicable under section 24, where supply of goods or services are undertaken through e-commerce operator. ECO. So if at all goods or services are supplied through e-commerce operator, as per section 24, there is a compulsory registration. So this concept of supplier not registered is incorrect. So the moment there is a supply happening through e-commerce operator, these agencies ensure that you are registered under GST law. Unless you are registered, they cannot allow you make a supply under GST law. Right? So this concept of unregistered absolutely does not come into picture. So what if both supplier and buyer are registered? Now the concept of TCS says, irrespective of your buyer is registered, for the value of supplies made by the supplier, for the value of net value of supplies made by the supplier, this ECO will recover 1% as TCS. This concept does not look at the buyer. This concept looks only at the supplier. From supplier perspective, this concept of TCS is being applied. So with this, we come to the end of the discussion on today's session with respect to e-way bill provisions, read with your payment of taxes, read with your TCS provision. Come back to presentation. This is a total concept which is expected from examination. I would draw your attention to this chapter, payment of taxes, where a 6 marks question is expected, 4 marks a problem, and 2 marks is one theory with any of these questions which are set from the backdrop of how you apply order of utilization, electronic credit ledger, when it gets credited, when it gets debited. This is what we need to understand holistically from the payment of taxes point of view. Couple of provisions with respect to filing of annual returns, audit under GST. I have kept it on hold for the purpose of your returns under GST law. And many of you with respect to videos, yes, the issue has been escalated to Board of Studies and they have been working on this particular aspect. Please wait for a time and this shall be restored back. Till next class, I thank you all of you for your patience listening. We'll meet again on other topics in discussion. Till then, good night, goodbye.